Good morning, everybody. Welcome back to another episode of the Market Open. We have a lot to discuss today. Got a lot of stuff that has been happening in the past 24 hours that is uniquely impacting equities and the bond market, which I will be talking a lot about today because we've got some wonky stuff happening in the bond market. We've got China that has officially retaliated against the United States tariffs with a new tariff of 125%. We'll be talking about the implications of that Chinese new tariff and what that means overall for equities. And we've got PPI, which is the first thing I'm going to start off with. Thank you, everybody, for being here. PPI comes in pretty aggressively to the downside. 2.7 year over year versus 3.3 expected. This is good. This is really, really good. We needed a number. Oh, also we have bank earnings that we'll talk about. We got a ton of bank earnings today, so we got a lot of stuff to get into. JP Morgan, Morgan Stanley, Wells Fargo, BlackRock. So we'll be discussing about all of those different banks. These are really good numbers. Again, the expectations were pretty strong in the context of increased inflation. Month over month, we came in at negative 0.4%. Expectations were positive 0.2. Month over month on the core, we came in at negative 0.1. Expectations were 0.3. Yearly, we came in at 2.7 versus 3.3. And then even on the core, which again, the Fed looks at the core even more than the headline number, we came in at 3.3 versus 3.6. So this is good. This is not bad. And as Dougie says right there in the chat, J-Pow needs to cut ASAP. I agree. He does. However, there's this big word that starts with a T that is currently, I believe, stopping J-Pow from cutting, which is tariffs. And we're going to talk a lot about that today as we get into all these headlines. Probabilities for May cuts went from 24% to 28%. Obviously, the probability is going higher because if inflation is coming down as dramatically as it's coming down, the fact that it's negative month over month in key areas means that, hey, the Fed shouldn't have a restrictive, tight policy against the actual data that we're seeing. But we've got volatility in the context of tariffs, which is why inflation is still an issue for the bond market. Now, in the midst of this amazing data, and quite frankly, I don't want to undershoot it, it is amazing. We have not seen a PPI or CPI. Yesterday's data was amazing as well. Since I believe, well, CPI we haven't seen as good since 2020. PPI, I don't have the exact date, but at least in the past year, I don't think we've seen negative PPI, nor do I think we've seen a negative 60 basis point retracement versus the expectations, which is what we're seeing right now. So these were incredible, incredible numbers. However, even with these amazing CPI and PPI numbers, even with the fact that inflation seems to be falling like a rock, bond yields are up. US 10-year, 4.46%. US 30-year, 4.915%. Last night, the 30-year Treasury had its highest weekly gain for the first time since 1982. So in the midst of the excitement around CPI and PPI, and the markets are reflecting that, it's S&P 500 up about 0.3% right now, why are people not buying bonds? When CPI and PPI come in this low, the goal should be, okay, let me lock in my rate right now because the Fed's probably going to cut rates because inflation's coming down, so they don't have to be as restrictive. If they don't have to be as restrictive, I should get my 4.5% or my 4.9% on the 30-year. But they're not doing that. They're selling off bonds. And this is, I think, going to be a big theme of the show today. I did a lot of research last night trying to understand what the hell is happening. There's a lot of opinions and a lot of thoughts in terms of why the bond market is selling off when stocks are selling off as well. It's supposed to be inverse to what's happening in the stock market. Or why yields are rising, which is why bonds are selling off. S&P 500 right here up about 0.43%. I think there's a couple of reasons why the market is getting some momentum right now, and we'll get into it. Silver right here is up about 1.4% as well. Gold hit an all-time high last night, which is also very troubling. But the central question that I think people are worried about right now is why are stocks going down and why are yields going up? And there's a lot of data we have to look at to try to answer that question, but we will get into that here today. So S&P 500 up about 0.5% in the pre-market. CPI and PPI were very good. PPI incredible. However, still a concern for the bond market, which is why we are not seeing yields come down. We are not seeing people buy bonds currently right now. Uncertainty is definitely an answer. Tariffs are an answer. I mean, there's a lot of things to look at. Also, the Dixie, we'll get deeper into this, but the Dixie is on pace for its worst week in about 2 years. 99.74 on the dollar index. Around 8:30 a.m. Asian time or Asia time last night, which was about, I believe, 11 p.m. in the eastern part of North America, we saw Asian investors sell off the dollar. And that is continued throughout the day. Dollar right here down about 1.12%. Stocks cannot be down, yields cannot be up, and the dollar can't be down at the same time. The last time that happened was 2020. And there was a money printer that was turned on, which saved the market. Today, we're going to discuss if that money printer can continue to be turned on to save the market. But that is a lot of the problems that are going on right now. And I don't know if there's an easy answer to this. I do think Trump holds the cards here, and I think he has a way to play it. But we're going to have to see if he plays it anytime soon. We're going to switch to Neil. I was about to call him Yield Kashkari. Neil Kashkari. I think he did a really good interview today that was helpful on CNBC. We're going to listen to him for about 5 minutes, get some thoughts on what he thinks is going on in the bond market and how the Fed is closely monitoring the situation about yields rising, even though stocks are falling. And then we'll get deeper into what China did today and try to connect that back to what's going on with yields right now.
We'll do it this way, but I just want to ask you broadly, how are you feeling about the economy right now and financial markets, given all of the changes that are going on? I'm going to ask you the most open-ended question I've ever asked a Federal Reserve official.
Well, good to see you. Thanks for having me. It's hard to get a read of what's happening underneath. You know, it's really important for the Fed. Obviously, we're very focused on inflation and employment, trying to understand we've got an uptick in inflation expectations in the near term. It's our jobs to make sure that that does not translate into a long-term increase in inflation expectations. And so I'm paying attention to the same market moves you all are. The bond market, I'm paying particular attention to try to understand what is it telling us about the underlying inflationary dynamics. And it's a complicated thing to analyze.
Before you get to the inflationary dynamic of the bond market, Neil, one of the remarkable developments has been this, that at a time when there's concern across the globe, the general trade has been to trade into U.S. assets as a flight to safety. That's not happening now. The dollar is selling off this morning against a broad range of currencies. Yields have been elevated. Is it curious to you, and what is it telling you, that there is no obvious or traditional flight to safety in the current environment?
Yeah, I think your observation goes to the heart of the matter, and I always go back to fundamentals. Why do we have a trade deficit in America for decades? It's because this is just the math of economics. Investors around the world have viewed America as the best place to invest. And if that's true, we will have a trade deficit. And so now, one of the ways that expresses itself is in lower yields across asset classes in America. So if the trade deficit's going to go down, it could be that investors are saying, okay, America no longer is the most attractive place in the world to invest.
Essentially, what Kashkari is saying is the reason we have a deficit. This is very important. The reason we have a deficit, the reason we export $100 from a country and they only export $1 from us, or import $1 from us, is because we get to print as much of the dollar bills we want to print with relatively no consequences. I mean, we get to inflate our currency away, but no one cares because everyone buys US dollars, everyone buys US debt. We are the reserve currency. If we want to take away that deficit and we want to start having a surplus, then some countries and hedge funds, foreign actors, et cetera, they might be thinking, all right, maybe the US is not the best place to invest. So he's saying the trade-off for us having a deficit with the world, because the US consumer is the best consumer and we import everything from everyone else, is that we get to be the reserve currency. And so Kashkari's argument right here is that maybe yields are going up because people are selling bonds, because the tariffs, aka a reduction in the trade deficit, is leading investors to believe the US might not be the place where we get to have the world's reserve currency at.
And then you would expect to see bond yields go up. Now, it also could be inflation, and that's why this matters a lot to the Fed. I'm not seeing evidence yet that long-run inflation expectations are climbing, and it's the Fed's job to make sure that that doesn't happen. But I would expect to see, if investors decide, hey, we want to invest elsewhere, all else equal, that ought to be pushing up yields, and you'd see that in what we call the term premium.
Neil, can I just throw one other possibility on that? These are pretty short-term moves. We hope they don't become longer-term moves. Could it be a reflection of hedge funds and others that were leveraged and needed to sell things as equity markets dropped, selling the assets that are most liquid and trying to make sure that they have the cash to pay?
This is an important question. So Becky's basically saying, hey, do you think a hedge fund's blowing up right now because they were levered against their debt? Stocks fell. They need to sell the thing that's the most liquid, which is U.S. debt. And that's also causing a rise in yields because there might be a fund that's unwinding their trades.
Whatever comes.
Certainly, there's a lot of, you're right, Becky, there's a lot of complexity. The basis trade has been getting a lot of attention. But I would just point to something that Steve mentioned, which I think reinforces the story a little bit, and that is that the dollar has been weakening. Normally, when you see big tariff increases, I would have expected the dollar to go up. The fact that the dollar is going down at the same time, I think, lends some more credibility to the story of investor preferences shifting.
Neil, let's talk about...
Okay, I'm not going to go super deep into the basis trade. I'm still trying to understand it myself. But in one sentence, the basis trade is a financial strategy where investors, primarily hedge funds, exploit the price difference between cash treasuries and treasury futures by buying one and selling the other, often using leverage to profit as the prices converge. And that's how they whatever spread they make in the middle, that is their profit. This trade has worked out very well. When did the trade blow up? 2020. How does the trade blow up? Yields go up, stocks go down, and essentially the difference between the futures of the treasuries and the treasury itself goes negative, and you have to get out of everything. And that's when the Fed stepped in 2020, bought a bunch of treasuries, turned on the money printer, quantitative easing, et cetera, et cetera. Think of it like the carry yen trade, but on steroids, because you're playing with the entire US treasury futures market. I'm not saying it's exploding right now, and neither is Kashkari, but the fact that yields are up when stocks are down is troubling. And a lot of people are theorizing that there could be some structural problems in the system causing the basis trade to potentially implode again. We're not there yet, but obviously seeing yields go up and stocks go down, the dollar go down as well, that is not encouraging. And I think it can be fixed. We'll talk more about how I think it can be fixed after this, but that is the main headline over the past couple of days, which is the basis trade imploding once again?
Things that we never really want to talk about, which is this idea of what's happening in the financial plumbing. And those are the calls that I make to people to say, hey, how is this stuff happening? And when I say financial plumbing, what I mean is the reason why you can have your paycheck direct deposited and then withdraw cash at the ATM machine, the pipes that connect those two, that's the financial plumbing. And it's all around the globe for the dollar. I made some calls to people, Neil, and one guy said to me, we're not the story now, but we're getting closer. So give us your idea or your sense at all what's happening inside the financial plumbing. Does this rate in a way that was near or close to what happened in the pandemic, or are we still far away from that and we shouldn't be worried about that?
I think we're quite a ways away from that. I mean, during the pandemic was so unique because the virus was so unknown and how dangerous it was so unknown that people fled all sorts of assets, stocks, bonds, everything, corporate bonds, treasuries, and they just wanted cold, hard cash. And that's where the Fed had to step in a very profound way to flood the system with liquidity. Ultimately, we have the ability to manage some of these transitions. So if there's a dislocation, I'm not forecasting this, but if there were a dislocation, we have the ability to smooth out that dislocation. But going back to the discussion on yields, we're not going to be able to change where yields ultimately settle. All we can do is make that transition path a little less rocky. But the settling of where yields end up settling, that depends on trade policy and fiscal policy and U.S. economic competitiveness.
You don't want to stop.
That's out of the Fed's hands.
You don't want to stop the market from getting to a new equilibrium that it wants to be at. You can only smooth the transition there.
Correct. We don't have the ability to stop it settling and wherever it wants to settle.
That's Kashkari essentially saying we are not going to turn on the money printer again. And he can say that right now, but if shit hits the fan, like it did in 2020, they will turn on the money printer. Now, why did he say, so that was a really important question that he was just asked about, like, why isn't this like COVID, right? Because again, in COVID, stocks went down, yields went up, the dollar went down. Everything was a mess. Those three things cannot be happening at the same time. The Fed stepped in and they did something unprecedented. They bought as many treasuries as possible. They backstopped the selling off of bonds, and that's what created the liquidity for our markets to survive. The reason Kashkari is saying, essentially, if you read between the lines, that they're not going to do that again, is because he believes that the level of uncertainty that came during COVID, aka global pandemic, and everything shut down, yada, yada, you don't know how deadly the virus is, whatever. All of that was so uncertain for investors that they ended up selling bonds. They didn't even trust U.S. debt at that time because of how bad COVID and the pandemic was perceived to be. He's saying right now, that type of uncertainty is night and day. There is no world in which everyone's freaking out about some global pandemic, the economy shutting down, restaurants are shutting down, etc. It's a level of uncertainty that is aggressive in the context of tariffs, but it's not the pandemic, aka we don't literally have to quantitatively ease our way out of this because we don't think it's some crazy deadly virus that's killing everybody. Sure, but what if it gets bad? Maybe not as bad as the pandemic, but what if it gets bad? And I think that's the question on everyone's mind right now. Again, if you're just joining, thank you for being here. PPI, big beat, bond market not reacting in the way it should be, which is yields coming down. They are going up, even after we got negative inflation for the first time in over 2 years in the context of PPI, and we had negative inflation on the monthly on CPI for the first time in 4 years. So from that perspective, although Kashkari is saying, well, the level of uncertainties right now are not that intense, the bond market's basically calling BS on that. And they're like, no, we think the level of uncertainty is pretty aggressive, and we are not willing to buy your debt until we have a better understanding of what the certainty is going to be. Now, you may be asking the question, what could be so uncertain that's causing people to not only sell off stocks, not only to sell off crypto, not only to sell off the US dollar, which is why the dollar index is the lowest it's been in a couple of years, but also sell off bonds, which are supposed to be a flight to safety. When shit's hitting the fan and you don't want to take the risk on Nvidia or a Palantir or a Robinhood, you know that you can take a risk, which isn't really a risk, on US debt because you're betting on America, and America theoretically shouldn't fail. What is causing people to feel so scared about tariffs or about buying bonds? Tariffs. That's it. That's the answer to all that. Like, this has been a crazy puzzle for the past couple weeks, and it's leading to the bond market basically saying we cannot tolerate these tariffs anymore. And I think this is also causing yields to rise this morning, even though PPI was amazing. China retaliates to the United States with a new 125% counter tariff. The United States is currently imposing 145% tariffs on China. China will start collecting the 125% tariff starting tomorrow, April 12th. And this is up from the previous 84%. That previous number, by the way, was instituted 2 days ago. So it's like we went from 84% to 125%. And China also explicitly said, we will now ignore the US if they continue to raise tariffs. Trump doesn't want to blink first. Neither does Xi Jinping. Someone's got to make the first call. I don't know who it's going to be, but it feels like it's getting close to a decision being made in terms of getting the call to happen. Why? Because China is basically saying, hey, we can't even market our shit. We can't even actually sell our stuff at like even a 1% margin if you keep increasing the tariffs. So what I was saying yesterday is like these numbers, 125, 145, 155, 84, it's all makeup numbers. It's like toddler numbers. They're going back and forth. And now the US will say 200, China will say 250, the US says 300. Like, it makes no sense. It's all nonsense going back and forth as a form of negotiating, when in reality, both countries know, like Apple, Amazon, Walmart, they can't make a profit, or they will severely reduce their profit margins if they have to deal with these triple-digit tariffs that we're getting right now. And so I think someone's going to blink first. Now, one thing that I think is encouraging about what China said today is, notice the language right here. We will now ignore the US if they continue to raise tariffs, aka saying, let's say Trump comes out today and says, hey, we're going to do 500% tariffs. China's saying we're going to ignore that. And the reason China's saying we're going to ignore that is because, in my opinion, China's saying it's time to talk. It's time to talk. Like, this is a stupid game. Like, you want to make up these crazy numbers. Or we're not going to do 500% again at you. Like, at this point, we're just going to ignore it. Whatever you do is whatever you do. But when you want to come talk to us, like, pick up the phone. And I think now that they increased by 125% this morning, they're probably more willing to pick up the phone because they're not going to make a profit at 125% as well. It's just an ego war. I do think at this moment, it is Trump's ego with Xi Jinping's ego. Very big egos on both sides. And Trump spoke pretty friendly about China yesterday. He said, he's my friend. He said, I'm willing to get a deal done. He says, I think we're going to involve TikTok, yada, yada. Trump was speaking really nicely about it. And then he gets hit with 125% tariff today. And as he should, right? If we're going to hit them with 145%, they're going to come back at us. The question is going to be when someone blinks. And so far, no one has blinked yet. But that level of volatility via tariffs is causing the bond market to be scared. It's causing the bond market to be scared. So last night, again, yields are down a little bit from where they were last night, but around, call it 9 p.m. last night, we started seeing the 30-year Treasury get very close to 5%, which is insanity right now, given where the stock market is. And it was on pace for the largest weekly gains since 1982. So what's the conclusion to this? Like, how does this get solved? Or at least what's my thesis on how this eventually is going to get solved? By the way, there was a typo in the title. I said 135. I think I switched it to 125 now. So if you refresh, that typo will be fixed. But yeah, it's not 135% tariffs. It's 125% tariffs. The solution to me lies in Mr. Bessent. Scott Bessent. Also, yes, the United States did announce via Fox News yesterday, the Trump administration told them that they will potentially think of banning Chinese stocks from exchanges in order to negotiate or retaliate or whatever against the Chinese tariffs. China will just do the same to us. So you won't be able to buy Alibaba on Fidelity, and you won't be able to buy Nvidia or Apple on whatever Chinese brokers that exist. Like this thing just can't keep going back and forth. I mean, at one point it's going to get ridiculous, and someone's going to have to step in. The person that's going to step in my opinion, is Scott Bessent. Scott Bessent is not perfect, but if there is anyone on planet Earth that understands what's going on in the bond market right now, why the bond market is scared, why yields are going up, why stocks are going down, it's Scott Bessent. And I just thank goodness that he's in the administration, because if we had to deal with Navarro or Lutnick trying to navigate what's going on in the bond markets, I think we would genuinely be screwed. But Bessent understands this. It is my belief that when bonds started screaming 2 nights ago, the reason we had that 90-day pause and everyone chilled out, the S&P rallied 10%, is because Bessent went into the Oval Office and he told Trump, we're on the path for a depression. You can either get us into a depression or not, but we have to do something. We have to calm the bond market down. Trump capitulated. He said, all right, we'll do a 90-day pause, art of the deal, whatever. It didn't work. It didn't work. Let me say it again. It did not work. Yields are pretty much at the same levels that we were 2 nights ago, like 5 hours before they announced the pause, which caused yields to chill out. We're back there. And so as a result of that not working, we've got an issue, which is that the bond market is now calling BS on the 90-day pause. Now, why are they calling BS on the 90-day pause? By the way, the S&P 500 falling a little bit pre-markets. It was up 0.5. Now it's up 0.1. So we're seeing stocks get a little bit more red, still green across the board, but except Tesla. Tesla's down 0.5%, but a little bit more red than Robinhood was up 2%. Now it's up 0.49%. What's Bessent going to do? What's Trump going to do? I think there's 2 solutions. I think they either have to take the 10% tariffs across the entire world down a little bit, right? Maybe to 5%, maybe to 9%, maybe to 8%, whatever it may be. Something that gets the bond market to be like, okay, we have more certainty around tariffs. Why does the bond market want to see this? Because even if we took the 90-day pause and the reciprocal tariffs off and we're still at 10% across the board, I think the market woke up yesterday and was like, wait a second, that was a really good dream we had. S&P went up 10%, but we still have the highest inflation rate ever, or at least since the 1900s, based on this 10% unilateral or universal rate being applied to every single country in the world. And so that still gets inflation, that still gets tariff rates on average to about 22%, which could obviously increase inflation. So if we get that 10% down to 5%, maybe the bond market gets happy. If we get a deal with China, maybe the bond market gets happy. And obviously, if the Fed starts buying up our bonds, the bond market will get happy. Well, let's look at those 3 options. The Fed's not going to buy bonds. That's not happening. Kashkari basically just said that. We're not getting a deal with China anytime soon. I mean, I would be very impressed if we get it within the next week, given the level of negotiation. I do think we'll get it before the end of the month, but it's not happening enough in the short term to calm down the bond market. And you don't need long before there's a credit event. You really don't. Like if yields keep going, we get a credit event pretty damn soon and something breaks. So then what's the only solution that's left? I think the only solution is you have to take that 90-day pause and make it 180 days, or take the 10%, make it 5%. Like you've got to do something around that kind of other thing that we're dealing with from a negotiation perspective with all the other countries, and like get the bond market to feel like that's going to work out. The problem is, what would the administration look like if they said, yeah, that 10%, we're taking it to 5%? I mean, they would look weak. They would look very weak, because it's like, what? Like, what are you doing? Like you convinced us we needed these reciprocal rates. Then these reciprocal rates went down to 10% across the board. Now your 10% is going to 5%. I think there's probably some, egos in the White House, whether it's Lutnick or Navarro, that don't even like the 10% idea. And that was really Bessent's idea. And now if they were to lower that percentage to try to calm down the bond market, that would look pretty weak in terms of a negotiation strategy. So how do they resolve this? I don't know. I really don't know. And I think Kashkari doesn't know either, which is what we just heard from. Like his argument is, oh, well, people are selling bonds. But yeah, there you go. Stocks are going red now. Wow. S&P from up 1.2 to down 0.3, 20 minutes before the market opens. Again, really hard to trust anything in this market, but it's likely because yields continue to rise. But I think Kashkari Kashkari's argument is like, hey, we can't turn on the money printer because there's not as many uncertainties as COVID, but there are still massive uncertainties. And until we navigate those uncertainties, which is not Powell's fault, it's not Kashkari's fault, it's not the Republicans' fault, it's not the Democrats' fault, it's Trump's fault. Now, the good thing is Trump can fix it. He can inject certainties into the market. But the question is he? When is he? And how is he going to do it? And I think that's going to be the game over the next realistically couple hours if we still continue to see bond yields rise, but also over the coming weeks to get markets to calm down. And this is the issue that is shaping up right now, which is why stocks are down, and more importantly, why yields continue to rise. It is a fascinating thing to live through this. I mean, here you go on the 10-year, ticking right back up, 4.49. You could round that up to 4.5. And then the 30-year, it's very close to being rounded up to 5% even. It's at 4.927. That 2 turns into a 5. There you go. You're at 5% on the 30-year. And this is troubling. This is really troubling given how good these numbers are in the context of PPI and how good the numbers were in the context of CPI. Now, what does that mean for me? I'm not selling my stocks. I'm not liquidating my portfolio. I'm not saying we're going to have a 2008 credit crisis. If it happens, it happens. It would really suck, obviously, if it happens, but I'm not going to try to time it and be like, well, I know when Basent's going to do this, so I'm going to sell my stocks and then get I'm not playing that game. From an analytical perspective, though, it is one of those things where, analyzing the dynamics of how this is playing out and what could be happening in the background and how the administration essentially created this self-inflicted problem, not saying that we don't need tariffs, not saying that we don't need better deals with countries, but the level of aggression they've taken is being rejected, not only by the equity markets, forget the equity markets, it's being rejected by the bond markets. And that is much more important to me than the equity markets because equities can always come back. But if the US loses trust, and they lose trust in a pretty quick amount of time, that's something that's not going to work out as easily. Chamath Palihapitiya tweeted last night, who has been a staunch advocate of the tariff policy, stocks have crashed. Something is broken. The US dollar index has crashed. Something is broken. Actually, stocks are back to where they were in May of 2024. PE ratios are mean reverting back towards historical norms. The US dollar index is back to where it was in September 2024. Perhaps this is when we need to take a deep breath and question who actually wants us to believe these hysteria-inducing headlines. I responded to Mr. Chamath. I responded. And I said, Chamath, you were literally bragging about 10-year yields coming down a few days ago. Now they are going up as stocks go down. This isn't about the markets. This isn't about fear-mongering. This is about why the bond market is acting like it's 2020 and yields are going up while stocks are going down when bonds should be a flight to safety. Whatever the administration tried to do to get yields down to come down is not working, and PPI, CPI being some of the best results we've seen in a couple of years is also not working. If it continues to not work and the Fed doesn't bail us out, which Kashkari just said, hey, we're not going to bail the markets out, we've got a much bigger issue than stocks going back to May 2024 levels. I have not received a response from Chamath. And I think it's because Chamath doesn't have a response. He doesn't have a response. No one has a response. David Sachs doesn't have a response. Peter Navarro doesn't have a response. Trump doesn't. No one has a response. No one has a response. Because we cannot see this type of volatility in the bond market when the stock market is acting like this. And the Fed knows that. Trump knows that. Chamath knows that. They don't know what the solution is. They're just hoping there is a solution. By the way, I think we will have a solution. I quite frankly think today, Friday, April 11th, we could get another tweet by Trump that completely changes this, gets the markets to cool down. Even if stocks don't go up, bonds finally come down or yields finally come down and the market's relaxed. But when Trump tweets last night at 7 p.m. that he's going to now tariff Mexico if Mexico does not flow more water to South Texas. I'm not an expert on the water relationships between Texas and South Mexico, or South Texas and Mexico. But the fact that he says that that he is thinking of tariffs and quoting from his tweet, maybe even sanctions until Mexico honors the Treaty of 1944, which I have to do more research about. I don't know every little detail about that. But the fact that he's creating even more uncertainty by saying, hey, Mexico, you violated this treaty from 60 years ago. I'm ready to tariff your ass again. That's not good for the bond market. That's obviously not good for the bond market. And because now the bond market is just like, oh, so not only China's getting 145%, not only is South Africa getting 10%, now Mexico is going to get more tariffs. And it's one of those things, obviously, that is just creating massive uncertainty at this point, which is leading to the level of pain that we're seeing in the bond market and also in the stock market. Here's an update on those China tariffs, and then we will keep going from there.
25%. It says it no longer will match U.S. tariff increases because at this point, American imports aren't marketable at these levels. They're calling it a, quote, joke. Eunice Yoon joins us this morning on the ground in Beijing. What is the latest?
It's not funny, though.
Thanks, Andrew. So these new tariffs are going to go into effect in 6 hours' time. And as you were suggesting, the language around this decision is really interesting. The Chinese Commerce Ministry had called these tariffs abnormally high. They said that they were a joke. And the argument is that at these levels, Chinese people wouldn't even be able to buy some of these American goods or wouldn't want to buy American products. So the ministry went on to say that if the United States continues to play the numbers game of tariffs, then China will ignore it. So instead, the focus has been on how to support Chinese exporters from President Trump's 145% tariffs. And it looks as though the government is also marshaling some support from the private sector. Today, JD said that it's going to buy $27.3 billion worth of Chinese exports this year to sell into the Chinese market. Alibaba, its grocery chain, Hema, is going to be fast-tracking exporters to sell into the China market. And then we also saw some support for Chinese companies that want to use American tech, because the Semiconductor Industry Association defined what it means by a U.S. chip. So a U.S. chip, if it's designed in the U.S., but then it's taped out or basically turned into a chip elsewhere, then those ones would not be subject to a tariff by the Chinese.
Which is good for NVIDIA. And that's one of the bullish headlines that we got this morning. But for the rest of US goods, that's obviously not the best. This is a video that is going viral on Chinese social media right now. It's pretty incredible, but they're using AI to describe what it would be like for American workers to actually work in factories. As you can see, the Americans are rather overweight as they try to put screws inside of boards of chips. And this is how the Chinese are thinking of this entire situation right now. Basically, the Chinese population is like, oh, really? You think you're going to manufacture everything in America? You think you guys are going to be able to just easily build what we build in China? And from a obviously propaganda standpoint, they're trying to convince Americans that, hey, there's like no way that this is going to work. And they're using AI to make the point right here. At the end of the day, this is not a trade war. This is a meme war. Yeah, exactly. It's a meme war. Like at the end of the day, something's going to have to be done about this, right? Like and to an extent, they're right. Like I don't think that many Americans want to be putting nuts and bolts and like bake stuff. Like, do we need more domestic manufacturing? Of course. Do we need to make every little knickknack that we import from China? Probably not. And that's probably not going to be the best for the USD being the world's reserve currency if we're operating at a surplus with China and making all those little things. Probably not the best for the cost of goods in the United States as well. The United States as well from a labor perspective. So nonetheless, China knows that America's not going to manufacture everything. The administration also knows that. That's why Lutnick keeps talking about robots automating the process, because he knows not everyone is going to be making the little knickknacks that we get from China. But China also knows that they can't afford to lose the U.S. consumer. They can't. Like we export 5x or we import 5x more than they import from us. That's a big market from them. And so one other forms of retaliation, this was a headline that I missed yesterday, but they said that we are going to limit the amount of films that can be imported into the United States. AKA, like when Disney makes a new film, there's obviously a ton of Chinese people that would want to watch it. There's quite a controversy in terms of how these films are created because Disney can't really show things that are not applicable in China. So there's already a level of self-censorship in these movies that are created to be able to make sure that they're applicable for China. But why do the movie studios go along with it? Because there's 1.4 billion people that could be watching it in China. And so now China's saying, all right, the one thing that you guys are good at exporting to us, which is your culture, we're going to start even putting a limit on that. I don't think that's the biggest form of retaliation. But the point is, it shows the intensity of this trade war or this meme war. I'll put the link to that video in the chat for anyone who wants to watch it again. And it is obviously elevating the type of impact that the bond market is thinking about as well. And obviously, we've already felt the impact in the stock market. S&P 500 right here, down about 0.4%. Silver's actually up a little bit in the pre-markets. Haven't seen that in a while. That's up 1.63. Robinhood's down 2%. Tesla's down 1%. TFC's down 1%. Lululemon's down 1%. SoFi's down. NVIDIA's a little bit up because of that China headline being good for the semis. We'll see if that fades or not, but that's why that one's probably green. Amazon's down 1%. Meta's down 1%. IWM's down. Nike's down. Bitcoin is actually up. I did buy IBIT yesterday. For those that missed it, I bought 100 shares of IBIT. The goal is to sell calls on it and just basically DCA into that exposure to Bitcoin. And so Bitcoin's holding up, which is also really interesting. But the rest of the market is not holding up as aggressively. Now, here's one thing I want to show in the context of Bitcoin, and then we'll talk about banks. We got 8 minutes until the market opens. Bank earnings are out. Now, the banks crushed it. Just as a summary, the banks absolutely crushed it. At least from what I'm seeing, I thought these banks had incredible earnings. I mean, all of them missed on revenue, but it's like literally by 0.01%. They all of them, to my understanding, beat on EPS by about 12%, which is what really matters versus revenue. So the banks crushed it, but the market really doesn't care because of everything that we've got going on in the context of tariffs. Here's what I wanted to show. Okay, yeah, this is pure speculation. All right, so this theory is not my theory. This theory is a weird theory, but I want to tell it to everyone because I thought it was super interesting. I put the probability at like 1% that the United States goes this route, but take a listen to this. So what if the plan all along was to go overboard on tariffs, aka the crazy, absurd April 2nd policies, to isolate China, to force them to dump treasuries, which is what we think is happening, and instead FOMO into gold at the top with all the wealth they've created over the past few decades? And one can make the argument that China has obviously been selling treasuries and potentially been buying gold given the surge we're seeing in gold. Then the United States can announce that they've completed an audit of the Bitcoin held by the government and the gold in Fort Knox, which is where all of our gold is. And the U.S. has decided to revalue the gold and mark it up from the 1970s prices to what is now an all-time high. And the plan is to sell half of the marked up gold to buy Bitcoin for the strategic Bitcoin reserve in a budget neutral way, which will absolutely crash the price of gold if the U.S. sells half of our stake, and be a rug pull on China and get Bitcoin to go to the moon as China ends up holding the bag by buying gold at 3,200. There's probably no way that happens. But as Dev says right here, that is a generational level of cope. I saw that theory last night and I was like, well, I guess if you own some Bitcoin, you start to think, hey, maybe that theory has some legs behind it. I don't think that's going to happen. But like, this is the level of insanity going on in the financial markets right now. People are coming up with these theories to try to justify like if any of this makes sense. Again, I think that theory is insane. That's not going to happen, but it just shows the level of panic that people are also having, which theoretically is a buying opportunity, right? And yeah, I agree. I'm not selling anything, but it also is panic that to an extent is justified, not because stocks are down and people are freaking out, but because the bond market and yields are going up. And that can't be happening, or that at least shouldn't be happening when stocks are down. So people are trying to come up with any different way they can make sense of this because there really is no way to meaningfully make sense of this. Earnings for the banks. The banks did really good. If you own banks, you should be relatively happy with the earnings, even if the stock prices aren't reflecting those earnings. So let's take a look at some of these. Wells Fargo, again, revenue missed by 3%, not that crazy. EPS, they beat by 13%, which is now up 16% year over year. 139 versus 123, 20.14 billion on revenue versus 20.76 expected. JP Morgan, beat by 9% on EPS, 507 versus 464. Beat by 3% on revenue, 45.3 versus 44. I believe JP Morgan is one of the only banks that beat on revenue. Revenue's up 8% year over year. EPS is up 14% year over year, and revenue's up 6% quarter over quarter. EPS also up 5% quarter over quarter. What's the interesting about what JP Morgan said today is that in asset trading, they have their highest commissions ever, which also speaks to what Vlad tweeted last night, which is that Robinhood is now number 1 in the App Store for finance, and they are number 15 in the entire US App Store across all the different consumer brands like Google, YouTube, DoorDash, etc. So the fact that Robinhood has got to the quite literal top of the charts in the United States means that the volatility has been bad for asset prices, but it's been really damn good for people getting interested in investing. Someone actually messaged me yesterday that said his friends got interested about stocks and they messaged him because they knew he was in stocks. He said, hey, download Robinhood and just deposit some money and play around with it. And immediately those two friends not only downloaded Robinhood, not only signed up, not only put $1,000 into the platform, they signed up for gold immediately. And so Robinhood just got 2 gold subscribers from people that are like weren't even in the stock market. They were just interested in the concept of stocks, and because of all the news that's going around, and now they're gold subscribers. So I think there's a lot of momentum here for Robinhood. Obviously, it's not good in the long term if stock prices keep going down, because that'll just decimate trading volumes, because people will be like scared to even trade. But overall, this volatility has not been bad for Hood. Morgan Stanley as well. I mean, look at these numbers, dude. Do these numbers scream recession? Beating EPS by 18%. Morgan Stanley is acting like a tech company right now. Beating revenue by 7%, 17.7 billion versus 16.5. EPS is up 30% year over year. Revenue is up 17% year over year. Again, growing faster than some of these tech companies. So I think from that perspective, the banks have been amazing. Like these earnings, Morgan Stanley, Wells Fargo, and JP Morgan, and then we have BlackRock that I'll pull up in a second. They were good. They were really good. Even one of the regional banks, Bank of New York, they missed on EPS by 4.75 versus 4.77, again, less than 1%. And then earnings per share, 158 versus 151, they beat that by 5%. Same thing with BlackRock. BlackRock, by the way, even in the midst of all the volatility, Larry Fink said today, they are now holding the highest assets under management, AUM, that they've ever had in the history of BlackRock. 1130 on EPS versus 1021, beat by 11%. Revenue, again, a very slight miss, 5.267 billion versus 5.31 billion. So banks are good, at least for now. I didn't go through all the guidance of what they said. We have some Jamie Dimon comments that we'll look at in a second, but I don't think they gave any crazy alarming guidance, because I think their stocks would be more affected if that was the case. BlackRock right here, down about 0.5%. JP Morgan is down now 1%. These were up about 3% like 40 minutes ago, so they're falling now, probably because yields are going higher. Morgan Stanley's down about 2.5%, and then Wells Fargo is down about 3%. So not the best reaction in their stock prices. I don't really know if it has to do with guidance outside of the CEOs just saying there's a lot of uncertainty, because that's what Jamie Dimon basically said. I think all stocks are going down right now because yields continue to climb higher. But the overall state of the earnings from the banks have been phenomenal. And the question is, will the market believe it? We got tech earnings coming up next week. TSM, Tesla, Netflix, all these companies. If they put up really monster numbers, Google, Meta, et cetera, but the numbers aren't respected because these yields keep going higher, then I think that's the issue. And I think that's where the markets are going to be pretty scared about what to do next. So that's what we've got going on in this morning. Trump just tweeted, here we go. He says, we are doing really well on our tariff policy. Very exciting for America and the world. It is moving along quickly. Ignore the battery that is perpetually going to be in the red. Well, the bond market doesn't agree, Mr. Trump. The bond market does not agree, even after the best PPI in a couple years. Yields 30-year 4.92, 10-year 4.49. The bond market does not agree that the tariffs are working, at least not yet. And so, look, do not be surprised. We have the market open in 20 seconds. Do not be surprised if later today Trump comes out with a tweet to calm down the bond market that could send equities higher. And that obviously could be a renegotiation of trade policy, a decrease in the tariff rates, whatever it may be. But I think something could happen today if yields continue to go higher. Thank you, everybody, for being here. Friday, April 11th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Here we go. Robinhood opens green, $40.80. That's up 0.9%. S&P 500 also very close to opening green. It looks like it's about to go green right now. It was just red 0.5%. It's getting rid of all that red. People are stepping in right now to buy the S&P. That's barely red right now, 0.05%. Looks like that one's going to go green. JP Morgan just turns green on a really good earnings. Not bad. Morgan Stanley still down about 1%. Wells Fargo down about 2%. BlackRock down 1%. Gold is up 2%. Tesla is up 0.4%. That is green. Google up 0.63%. That is also green. PayPal's green, up 1%. Oxy is up 0.47%. Some of the regional banks are down, like Truist. Baba is up a little bit. Amazon's down. Meta's down. Nike is down. And Apple are down. So those big tech companies outside of Nike are down. Grab is up. Now, one of the reasons Grab may be up is because the dollar's coming down, which is really good for Grab because they report in US dollars for their, but they operate in Southeast Asia. So a lower dollar is actually very good for their numbers. The problem is tariffs are really bad for uncertainty. So although the Dixie is good for companies like Grab, Nubank, and Mercado Libre, Nubank as well is up about 2%. Mercado Libre right here is up about 1%. The tariff volatility is not going to be able to, or the lack of the dollar coming down is not going to be able to withstand the tariff volatility. And that's why those stocks still haven't, got into their levels that they were at in January. Palantir right here down about 0.5%. VG, Venture Global down about 0.5%. Next Decade's down a little bit. Snapchat's down about 1%. Not seeing crazy declines across the market. AMD right here is up 2.76%. I think AMD had an event today, or they announced some event in June. So that might be one of the reasons why AMD is green right here. But that one going the opposite of some of the semis. Where's NVIDIA? Are we green on NVIDIA? We are green on NVIDIA, 1%. I need NVIDIA to stay below 110 today because I've got some covered calls. So I will be monitoring those throughout the day. But NVIDIA right here at 108.84. Max 7, again, everything's red except Google, Microsoft, NVIDIA, and Tesla. Amazon's red, Meta's red, Apple's red. Apple's probably red because China just announced 145% tariffs, 125%. And Amazon's red for the same reason. Apple and Amazon obviously very exposed to China. Semis are a mixed bag. SMCI down, Intel's down, ON's down, Qualcomm's down, Marvell's down, TSM's up, AMD's up, NVIDIA's up, Dell is up, Micron's down, and Lam Research are down. Sam Altman yesterday said that we are having more usage than ever on OpenAI, which to me is very bullish for NVIDIA. Right now they have 500 million weekly active users. I think within the next year and a half, they're going to get to 1 billion, given how fast they're growing. So they're going to need a lot more GPUs to be able to handle all that compute, especially with reasoning models. And NVIDIA right here at 108.35, getting some momentum this morning. Again, the Max 7 pretty much red in the context of Apple and Amazon. Now, all the crypto stocks, Bitcoin still green, 82,000 right there. Crypto stocks slightly green. MicroStrategy up 2%. Robinhood just went red. Coinbase is up slightly, 0.63. CleanSpark's up a little bit. But Bitcoin itself currently up 1.5% here right now. Where's the S&P? Did we go red? We went red. All right, so we tried to stay green on the open. Didn't have enough juice to actually hold that green. Now we're down about 0.5%. The 10-year is officially 4.5. The 10-year is officially 4.5. There you go. The 30-year getting awfully close to a 5 handle, still at 4.934. That 10-year above 4.5 is probably the reason why the S&P just went negative, down 0.5%. It's a weird situation, dude. It's weird. It's a little scary. I do think that there's going to be some reprieve for this. I think Trump knows there has to be a reprieve for this. I mean, this tweet was kind of pointless by him. We are doing really well in our tariff policy. Very exciting for America. Like, that does nothing to the bond market feeling like they can trust you, or for any investor to feel like we're just going to take your word that you're doing well. Trump needs to announce a substantive win. Either, hey, we got to deal with Vietnam and South Korea, or hey, these 90-day tariffs are going to go to 180-day pauses on tariff. Like, something that changes the dynamic of why people are so scared of not only stocks, but also bonds. And if he doesn't do that, we're just going to see more of the same. And we're going to have to be able to figure out what the new paradigm is in the context of the broader market. So I do think we'll get a response from him soon. I mean, I'm hoping, because again, if we see that 30-year over 5%, I think we get another tweet. Intel right here down 7%, but we have to see if yields actually can continue to get that high. Last night yields were going up aggressively, and then at around, I think, 10 p.m., they started coming back down. So either whoever was selling stopped selling, or someone stepped in to do the buying of whoever was selling. And so we got a little bit of reprieve last night. But then the PPI comes out, and you think, okay, PPI is amazing. Yields have to come down. Nope. They go right back up to where they basically were last night. NVIDIA right here up 1.26% currently right now. Nubank as well up 1.46%. JP Morgan, the only bank that's up 1.5% from the banks that reported today. And I think that's the issue, at least currently right now in the broader bond market. Palantir, 88.24, about to go green. Palantir did make an announcement today. If you are someone who is currently in high school watching the stream, which shout out to you because you probably should be in class, but you are instead learning about equities and the bond market. If you don't feel like going to college, you can apply to Palantir. So Palantir here says today, college is broken and admissions are based on a flawed criteria based solely on merit and academic excellence. Students will be invited for interviews in our fall fellowship for high school students. So basically, Palantir saying, hey, we don't give a shit anymore about your Harvard degree. We want to know if you can get the job done. And a lot of these kids are moving quick, dude. They're moving so quick. Like, this generation is getting ready to invest, crypto, all this stuff. Like, they are just like, they're going for it. They're not waiting for some 4-year degree to tell them how to live. They are just immediately starting businesses, startups, brands, all this stuff. So I think there are some bright young kids in high school and Palantir's obviously trying to recruit the best of them without needing to see that they went to some fancy college. Robinhood right here up about 1.4%. Tesla right here up 1%. Silver is green, along with gold at an all-time high, which is probably why the S&P is still down right here, 0.39%, teetering between 0.3 and 0.5. So you have some individual stocks going up. CoreWeave's up a little bit. Venture Global's up again. Robinhood, Tesla up. Rocket Lab's down a little bit. But silver and gold are up, which is likely why the S&P is a bit down right now. And Bitcoin's up. Bitcoin's also up, which is, again, dude, my only theory on why Bitcoin's up, and like, I don't know if this is going to be correct, but I think that if the money printer gets turned on, aka things get so bad and the Fed has to step in, we're going to have a lot of liquidity. And Bitcoin runs via the M2 money supply and liquidity. I mean, if you put a chart of M2 over Bitcoin, it's almost identical in terms of how it operates. Now, the interesting thing here is that if things get so bad, does Bitcoin break to like 50, 60K before the money printer's turned on? So maybe it can ride back up. Or do people front run that breaking by trying to say that Bitcoin will be the only stable asset or one of the most volatile assets to the upside because of all the money printing? Maybe people are front running that right now and buying Bitcoin, which is stopping it from actually tanking along with the NASDAQ. S&P 500 right there down about 0.47%. Where is the NASDAQ? NASDAQ right here about 0.3% down. So that's my best explanation for why Bitcoin's going up, but I don't know if it's accurate. Who knows? Maybe Bitcoin legitimately is a hedge to the global financial system, but not sure if it's going to work out like that. 10-year 4.51. My goodness, it's going higher, folks. And I know 4.49 to 4.51 might not seem like a lot, but every single basis point in the bond market, you could almost equivocate it to 1% on the S&P. Like, it matters because these things are not supposed to be as volatile, first of all, as equities. And they're not supposed to be going up when equities are going down. That's not supposed to happen. It's just not supposed to happen. 4.525. You saw it go up in real time from 4.519 to 4.525. The 30-year, 4.948. Someone's selling our bonds. Someone is selling our bonds. Again, if they just keep rising, just keep your eye on what Trump might post. Oh, Trump just posted again. Here we go. The tweet from Trump. Russia has to get moving. Too many people are dying, thousands a week, in a terrible and senseless war. A war that should have never happened and wouldn't have happened if I were president. Okay, that does not do anything for the bond market. I think people would agree that we should end the Russia-Ukraine war, but that is not necessarily going to make any difference to the bond market. So none of that is changing anything. Wow, look at Bitcoin, dude. Look at freaking Bitcoin. Just the green candle across the board. Now S&P slightly going green. Yields are still going up. 10-year went from 4.525 to 4.537. And stocks are kind of going green, which is somewhat good, even if yields are going up. But Bitcoin kind of showing like an intense candle right there from 82.5 to 83.2 in an instant. Again, I think it's too early to say that Bitcoin is the ultimate hedge, but right now it's kind of pseudo acting like it. Granted, it was acting like that last week, and then Sunday night came and then it tanked to 78,000 when the futures came out. So I mean, like we really have to see kind of how this plays out, but it is weirdly acting like that right now. Arnie says the euro to USD is killing my portfolio. Yeah, again, the dollar being sold off is strengthening a lot of other currencies. The Japanese yen is getting to levels that it was at during the yen carry trade. Now, I personally don't think there's another yen carry trade, but I mean, who knows at this point? But if you look at this thing over the past 5 days, USD over JPY, it is over the past 5 days down 2%. Over the past month, down about 3% here right now. The chart's not showing up on the screen, but you can see the values right here. I mean, at this point, Japan might end up raising their rates again to weaken their currency against the dollar. Who knows? Like this is, there is so many unknowns in terms of how this is playing out. And at the heart of it comes uncertainty around tariffs. Yeah, let's check Farcoin real quick. Farcoin's mooning as well, up 25%. So Farcoin being the hedge against the tariff uncertainty along with Bitcoin. S&P just went red. This is really interesting price action. Opened green, went red, got back to green like 5 minutes ago or like 3 minutes ago, and then is now back to red. It's almost like there's some teethering going back and forth with some actors that are playing with it in the context of what's going on with the bond market. Okay, we got a headline right here. US told China to request a Xi Trump call. I'm going to try to see if I can confirm that right there. If that's the case, it's being reported by CNN. US told China to request a Xi Trump call. If that is accurate, don't know if that's accurate, but that's what CNN is saying. I don't know if they have it exactly correct. That was reported on the Bloomberg terminal. That's why we're getting this update right here. Then that means that Trump just blinked. That means that Trump just blinked. If this is correct, I will say that again. If this is correct, I'm going to try to get some other sources to verify this. If this is correct, it's like blinking but not blinking. It's like the United States saying, hey, tell China, or they're probably telling the Chinese embassy, tell Xi Jinping to call Trump. Because Trump doesn't literally, it's like when you're talking to a girl, you don't want to text first, and you're like just waiting for her to text first, and you're just like, all right, like when is she going to text me first? But so like I don't seem like I'm the desperate one texting first. That's kind of what this feels like. And now it's like you go to one of that girl's friends and be like, hey, can you just tell her to text me first? Like she knows I like her. I just don't want to be the guy that texts first. That's what it seems like it's happening right now. That's what seems like what's happening, right? Instead of just picking up the damn phone call and calling, they're asking the embassy most likely to tell Xi Jinping to finally pick up the phone and call. That could have been the reason why the S&P just went green. That headline came out how many minutes ago? Literally 5 minutes ago. That could have been the reason. Where's bond yields? They actually did go slightly down, 4.517 instead of 4.53. I know that's a very minuscule decline, but again, that is a decline potentially on this headline. Yeah, 9:39, 4 minutes ago, that headline came out. Again, if it's true. If it's true. We still don't know exactly if it's true. I want to get a little bit more confirmation, but we could see. Maybe that's why the S&P is green right now. Nvidia's up 2%. Covered calls in jeopardy. Going to have to save those at the end of the day if this continues. Morgan Stanley just went green. JP Morgan just went green. Tesla, Robinhood, Google, everything going green. Oklo, Baba, Amazon, SoFi, S&P, Nike's about to go green. Nasdaq's going green. Grab's going green. This might have been the blink, folks. This might have been the blink. Potentially. Okay, CNN is now saying that the U.S. warned China against retaliating in a private talk. That's not really news, though. Like, the U.S. has already told China not to retaliate. And if they had a private talk already, that means they've already begun negotiations. So I'm going to wait for some more confirmations on those headlines. That one seems kind of weird. Because if they had the private talk, negotiations already started. So, like, what do they mean by a private talk? Unless they're saying the private talk was to the embassy. Like, they called up the embassy. They said, hey, get them to pick up the phone or get them to call us first, rather, and tell them not to retaliate again. I mean, like, maybe that's what the report is signaling. Bitcoin right here, 82.9, just down from 83.2, but still up 2.6% on the day. And then NVIDIA, just below 110, but up about 2.1%. The S&P 500 up 0.2 currently right now. We got to get some more headlines on this. We got to get some more confirmation on this. We should, if those headlines are real, those are massive headlines, and there should be other news sources coming very soon to confirm them. So I'll be waiting on those. But yeah, today, Friday, April 11th, might be a day where one of these guys blinks first if the bond market continues to act the way it's acting. And again, it's down very slightly from that CNN headline. It's not really going down to where I think Besant would be happy. So we're going to have to see if that ends up becoming true. AMD is up 5%. MicroStrategy is up 6%. Yeah, you're seeing some stocks really gain momentum in the context of this. And NVIDIA right here, back above 110. Again, it's just slightly above that. So we got to see if it can actually hold. If we do get a China deal today or any level of China progress, I think stocks will go a lot higher, or at least one. I think we get 1% on the S&P easily if we announce some level of a deal today, some level of negotiating to start. And we hope to get bond yields to come down if that happens as well. What else are we looking at? Michigan sentiment. Yeah, so I think we also get Michigan sentiment at 10 a.m. That's going to be about consumer confidence. Yes, at 10 a.m. Now, it's a preliminary consumer sentiment. It's not like a real consumer sentiment, but the number we're looking for is below 50 or above 54.5. We come in above 54.5, it looks like consumers are in a much healthier situation in terms of their perception of buying things. Below that could be bad for consumer confidence. Now, granted, wow, look at the S&P up 0.5%. There you go. Maybe those China headlines are being perceived as real, and that's what's causing this. A lower consumer confidence is not bad because that means demand is going down. Demand going down is also not bad because that means inflation will come down. Now, granted, CPI and PPI came in ridiculously negative compared to expectations, which is a good thing for inflation coming down. So if demand is going down and inflation is going down, that's not good because that just means people aren't going to spend money. That also means people might be getting laid off, and that means that earnings growth is going to suffer. So we need a lower consumer confidence, which is good for inflation, but it can't be like excruciatingly low because then it just means demand's dying, and that's obviously not good for earnings. BlackRock CEO Larry Fink just said that the U.S. is very close to a recession and may currently be in one now. That's not a new headline. He said that a couple days ago, but he said that again this morning after his earnings. Jamie Dimon said, we will be in the crosshairs of trade wars and some clients or some countries will feel differently about American banks if this continues. Now, again, Jamie Dimon's been ringing the bell on like this horrific recession or whatever that's been coming for like the past 5 years. But I do think in the context of the bond market, he has a bigger point that this tariff policy is creating so much uncertainty that it could leave banks in a tough situation as well. Is the 10-year dropping? All right. Okay, we're seeing some decline on the 10-year. I think that CNN headline might be real, or at least it's being perceived as real. Look at that, 4.537 to 4.501. We fall back to 4.9 or 4.8, or sorry, 4.4 or 4.3, which is where we were 2 days ago after the 90-day pause. Then that would be very bullish. And that could also be explaining why the S&P is going up about 0.7%, almost 1% right now. The CNN headline is that Trump called, or that the United States called China to tell them to call them back, essentially, which I know sounds ridiculous, but that's the headline, which is enough progress for the market to feel like things are going to be okay. Again, all of this, the more I learn about it, all of this is just based on perceptions versus reality. And like the reality is things might not be like that crazy. Because eventually I think we can all agree there will be a deal that's done. And I'm hoping sooner rather than later, which means all of this will look like a blimp on the overall charts once the deal gets done. But the perception of that deal taking way too long to get done is all it takes for a credit event to happen. Like the reason the Fed stepped in 2020 is because they could have trusted that, the pandemic was not that big of a deal. The virus was not that deadly. People will end up buying bonds and things would be okay. But they didn't give it that much time for it to happen because they really felt that who knows what happens. Like what if the pandemic ends up, killing 500 million people or something? And so they stepped in and they started buying treasuries and they backstopped the U.S. economy from essentially falling out. They're not doing that this time. That's what Kashkari said today. At least it's not uncertain enough for them to do it. But the credit markets don't care. If they have the perception of feeling like shit's hitting the fan, shit could hit the fan. Even if eventually this China deal will be resolved, hopefully in the coming weeks. Did I say blimp? I meant to say blip. What's a blimp? Did I say blimp, dude? These words. Wait, isn't a blimp the thing that flies in the air? That advertises stuff? A blimp is a non-rigid airship that uses gas to maintain its shape. Okay, so I meant blip, not blimp. I don't know how to talk. I'm sorry. S&P 500 falling a little bit right there, but still up 0.47% on the day. Oh boy. Let's see. What else is happening right here? Is Shopify tanking? Oh, Canada said some stuff yesterday. Yeah, Shopify's down 4%. Canada said that we feel, or the Ontario Premier was like, we're really feeling upset that Trump didn't include us in the 90-day pause, and it doesn't seem like he actually wants to negotiate. So apparently Canada was left out of that whole 90-day pause, and the tariffs are still on Canada right now, even amidst the ongoing negotiations, which is kind of weird as well. But yeah, Canada was pretty upset about that. That could be a reason why Shopify currently is red. Tesla just went red. Tesla officially started selling cars in Saudi Arabia. Also, Tesla announced a cheap, what do you call it? Cybertruck. A cheap Cybertruck, a $70,000 Cybertruck. The cheapest Cybertruck we've seen. Oh, the 10 years falling. There we go. There we go. Again, that CNN headline. It seems like it's being perceived to be real. 4.49 now from 4.537. They are selling a $70,000 Cybertruck now that is significantly lower in terms of, well, it's $11,000 lower than the base model. Is it 62,000? It might be 62,000, but it's lower than the core model. I don't know if that's going to help their sales. Obviously, deliveries were not good last quarter. I was reading an article the other day about how the Cybertruck really was one of the worst selling trucks in the country. And like, I see a bunch of them in New Jersey, but like, if you look at the numbers, what's selling in the context of Tesla cars are Model 3s and Model Ys, not really anything else. So yeah, I think it makes sense that they're doing this because they have to find some way to incentivize people to buy that truck. And one of the problems is it's freaking expensive, dude. It's a big ass truck. So maybe lowering the prices could help on that. Nvidia right here still up 2%. The S&P 500 right here up about 0.4% currently right now. Yeah, the problem I heard with it is they took everything out. They stripped it down. All the features that people love a Cybertruck for, they kind of took out of it. Like I saw a lot of Tesla bulls yesterday being like, this is not it. They can't take away all these features just for a lower price. So whatever makes the Cybertruck special, which I'm not as educated on, but the Tesla bulls were saying, well, that's not in this car, which is why it's so cheap. So, I mean, maybe that ends up helping sales, but as of now, doesn't look like that necessarily will be the best thing for the Cybertruck. Robinhood right here up 3%. Robinhood's really moving. Tesla right here up 0.4%. Again, Robinhood number one in the App Store in finance for downloads, which means that a lot of people are getting interested in stocks and they are picking Robinhood to begin their journey. BlackRock right here up 0.61. Look at Jamie Dimon. JP Morgan up 3%. Morgan Stanley up 1%. Wells Fargo slightly still red. Nubank and Nvidia continue to be green. So the banks that had good earnings go green. QQQ Tech is up 0.65. Palantir is very close to going green. And then the Mag 7, pretty much all green except Meta. Pretty much all green except Meta. All right, so at least we're getting some relief in the. I'm trying to confirm this CNN headline, dude. I'm trying to see if that actually is fair. Yeah, the only source that everyone has is CNN. We don't have a second. Oh, we got a Trump tweet. Here we go. The House and the Senate should push hard for more daylight at the end of a day. Very popular, and most importantly, no more changing of the clocks. A big inconvenience, and for our government, a very costly event. All right, so in the midst of the bond market potentially imploding, we are talking about daylight savings time. Dude, I didn't even know 2 weeks ago that it was daylight savings time. And when all of the Europeans in the chat said, why are you starting an hour earlier? I was like, what are you guys talking about? I'm starting at the same time. Like, I didn't even remember this shit. So, but what I do remember is losing like $100,000 last week. Like, that's what I remember. But we're not talking about that. We're talking about daylight savings time. This is incredible to see how this is playing out. I know a lot of people are ideological on daylight savings. I don't care, dude. Like I guess there's always been this passionate debate. Like I have no opinion on this debate. If we have it, great. If we don't have it, great. But yeah, that seems to be pretty important right now. Nvidia up 2.7%. Apple goes green as well, up 1.12%. Currently, right now, daylight is only transitory. Oh my gosh. All right, cool. At least we're getting a little bit of green momentum. I mean, who knows? Maybe daylight savings time is what the bond market needed to calm down for a bit. Bitcoin right here tried to reclaim 83, but back down to 82.8. But that is green. Robinhood really showing some strength, 3.4%. I did buy some more Robinhood yesterday. I bought some more Nvidia. I bought some more Grab. I bought some more IBIT as well. And like began a little bit of a DCA into Bitcoin, but outside of that, nothing too crazy. Okay, cool. So 10 years still 4.49. It's slightly below 4.537, but still up there. 30 years as well, 4.916. Again, CPI and PPI were really good. PPI, I would say, is phenomenal this morning. not necessarily affecting bond yields yet. If they continue to go the opposite direction, I do think we'll get some more Trump tweets that are probably having to do with tariffs. 110.32 on NVIDIA. Here is a chart that I think is also really interesting right now in the context of what's going on. So uncertainty index, there's an uncertainty index that takes an aggregated form of data, a lot of different variables to calculate how uncertain the broader global financial system is. And as you can see right here, that uncertainty index is at all-time highs. I mean, it's literally beyond the chart's peak, which was the global pandemic since 2005. 2020, obviously you would imagine, global pandemic, virus, people would be very uncertain. The Trump tariff policies, and I think this chart right here explains the bond yields. Like you would think bond yields shouldn't be that volatile because it's about tariff policy, not freaking a global pandemic. But the tariff policy is so intense, or at least the bond market feels it's so intense, that it ends up becoming about tariffs. And we have more uncertainty right now based on this index than we did during the pandemic, which to me is kind of insane. AMD right here up 5.7%. I think, so AMD made an announcement, right? They made some announcement about some special day they're having in June. I think that's what's creating some of this momentum. But AMD clearly outperforming the rest of the semis right now. Yeah, I believe that's what's helping them right here. AMD up 5.71%. But yeah, uncertainty. Uncertainty is very high. Currently very high. Michigan sentiment in 2 minutes. Yep, we get Michigan sentiment in 2 minutes. We'll see how that looks like. That will probably have an effect on the markets as well. Here's what BlackRock said right here this morning in the context of the uncertainty. They say uncertainty and anxiety about the future of markets and the economy are dominating client conversations. We've seen periods like this before when there were large structural shifts in policy and markets, like the financial crisis, COVID, and the surging inflation in 2022. We've always stayed connected with clients, and some of BlackRock's biggest leaps forward followed in growth after that. So essentially BlackRock confirming that, yes, the number one conversation they're having with their clients on how to navigate everything is about tariffs. And that is what's essentially dominating how people are thinking of everything. This is what Diamond said. This quarter from JP Morgan, we repurchased $7 billion of common stock and announced a 12% increase in the common dividend. He also added the economy is facing considerable turbulence, including geopolitics, with the potential of positives of tax reform and deregulation and the potential negatives of tariffs and trade wars, ongoing sticky inflation, high fiscal deficits, and still rather high asset prices and volatility. As always, we hope for the best, but prepare the firm for a wide range of scenarios. Pretty much all of the big banks announcing that the tariff stuff is top of mind when it comes to consumers. The Qs are up 0.5%. S&P still holding 0.5. NVIDIA actually up 2.4, high of day. In 1 minute, we will see Michigan consumer sentiment. And that either could take us up, down, or flat. Last time it kept us flat. So it might not be as big of a reaction, but let's see if there's any dramatic swing in that currently right now. 10-year back at 4.53. Goodness gracious. There it goes. No progress. No progress from that CNN headline. Right back to where we were when the headline came out. This is the issue. This is the freaking this is why I think we might get an announcement from Trump today instead. Like a real announcement, not an announcement about daylight savings time. Like, you might get something more real. All right. So again, we are looking for 54.5. 54.5. That's what we're looking for. Business confidence has a 49 projection. Above 54.5 would mean consumers are less scared to purchase things. Oh, 50.8. There you go. 50.8. That is much lower than 54.5. That is signaling that people are feeling uneasy about spending money on goods and services. That is a miss. S&P just, wow, dude, it's so incredible. S&P just lost everything. I mean, it's kind of, it was up 0.5. Now it's up 0.17. Palantir just went red. NVIDIA just, did we get a red candle right there? Yeah, got a red candle. Now a slight, yeah, there you go. There's a red candle. There she goes. There she goes, right there, 110.13. Nubank's still up. JP Morgan's still up. All stocks are getting a red candle. They're still green for the day. Even Robinhood, see, it was up 3.5. Now it's up 2.2. So they were green. They're not as green anymore based on that sentiment. which is good for inflation, right? Less people spending money. But I mean, if we see that in Walmart's earnings and Delta's earnings and Carnival's earnings and all these companies saying, hey, people, yeah, they're not spending that much money anymore buying stuff from our stores. Obviously, that is not good for the equity markets. That is the balancing act. Again, that's why J. Powell got so much credit in 2024. He figured out how to get inflation down without reducing demand so companies could keep up earnings, and we had an explosive stock market up 25% for the year. This year, right now, given the tariff volatility, it is a lot harder to pull off what he pulled off last year. Tesla right here goes negative, down 1.2%. Now, the thing about Michigan consumer sentiment surveys is, again, who are they polling? I've heard some critiques of the sentiment, which is that they only poll certain areas that are very politically on one side. So, for example, if the Democrats hate Trump and they think that inflation is a big issue, then if you only poll Democrats, you might get a biased response. I don't exactly know the nuanced, nitty-gritty details of the sentiment, but that's one of the critiques I've heard. The other thing is, like, every time we sell off from a consumer sentiment, anything, not even if it's Michigan, if it could be something else, like, I've seen a rebound pretty quickly. So, I mean, this is not good because yields are rising right now, so it's just putting more fuel on the fire. But it's not like, the sentiment is like the number one reason why stocks are down during a day. It could be, but I just haven't seen that in the past couple of reports. But obviously, it's not that good when bond yields are currently where they're at right now. Let's get an update on what's going on in some of these parts of the market, and then we will keep going from there and see what other headlines we got going on.
This hour, JP Morgan up 2%, the others backing off.
All right, we also have some economic data that just crossed the tape, and Rick Santelli has that for us. Rick.
Yes, David, these are not pretty numbers on our April preliminary look on University of Michigan sentiment. On the headline number, 50.8. That's 3 points less than we were expecting. That's about 6.5 points under our last look, and that's the weakest since June of 22. 56.5 on current conditions. That's also extremely light, weakest since June of 22. Huge drop in expectations, 47.2. And on the inflation front, 6.7% on one-year inflation. That follows a 5%. That would be the highest since the Thanksgiving of 1981. 4.4 and 5 to 10-year inflation. That would be the highest since the summer of 91. Now, these are, of course, not quantified, but qualified. They're surveys. And we just had good data in CPI yesterday, PPI today. But these are the worst fears, obviously, of those surveyed. And they really do underscore some of the underlying emotion that is in the marketplace.
And that is why stocks are taking a little bit of a haircut. Let's see if there's any recovery right here. Nope. Qs are red. S&P goes red. NVIDIA goes below 110. So the sentiment survey was enough to at least get these to reverse the green candles they had. We could easily see a reversal back to green, but the bond yields are not helping with that right now either. It's a pretty incredible time to be analyzing the equity markets. It's a pretty incredible time. Okay, so for everyone saying, wait a second, what about 10-year yields? They were at 4.8% in January. So what's the issue? Like, why is it a problem that, we're at 4.5%? Why is MIT freaking out if the 10 years was at 4.8%? Guess what else was up in January? The stock market. It makes sense if people are selling off bonds to buy stocks, because then we have a soaring stock market and people are willing to take more risk on the greatest companies in the world, which means the country gets richer because asset prices go up. And people don't want to hold on to our debt. That's a beautiful thing. And we had that in 2024. But if stocks go down and yields go up, which means people are not only selling stocks, they're also selling our debt, which is supposed to be what you buy when you don't want to take a risk on Palantir or an NVIDIA. That's not good. So yes, we did have a 10-year that was higher than this a couple months ago, but we also had a stock market that was significantly higher than, or in the context of the S&P, about 8% higher. For many stocks, 40 to 50% higher than what we have right now. And that is the damaging issue with what's going on in the bond market. So here's the question for everybody. First question of the day. I'm curious what people have to say about this. Okay, here we go. Do you think Powell steps in within, I'll call it, a month? within a month. What do I mean by step in? I mean, Powell says we are announcing today at the FOMC meeting, or an emergency FOMC meeting, that we are buying U.S. Treasuries. How likely do you think it is that he steps in? My answer is I don't think he steps in within a month. I think he's going to say, Trump, this is your problem. It's not my problem. I really think that's what he's feeling right now. And again, to an extent, I also think it's not as necessary because it's not COVID, right? Like COVID had a whole host of uncertainties. This can be solved with a freaking tweet. This can be solved with any negotiation that is announced by next Wednesday. Like this is not some pandemic where the unknowns are so unknown that you have to step in and print out stimulus checks and pump liquidity into the system. So I don't think they need to step in. But dude, if the 30-year gets to 6% or something, like if some insane number that no one is even conceptualizing right now because we're hoping that the system's not that broken, I don't know. I don't know if the Fed steps in. I don't know if he would feel a bit more compelled to take a shot to step in. 69% of you say no. I agree. But we're going to have to see if he actually does come in. Also, I mean, that's another thing. CPI and PPI is coming down. So that's an argument for the Fed to cut rates, right? PPI and CPI are coming down aggressively, which is good. And I think Jay Powell's very happy about that. The problem he has to deal with is that if he cuts rates, but tariffs are inflationary, even if it's transitory inflation, that gets them further away from their 2% target. And they're so close. They're at 2.4. We got CPI at 2.4 yesterday. We went negative month over month for the first time since May 2020. I mean, we are really close to hitting this thing over the head and getting it over with. S&P now up 0.6%. This has been a wild, choppy back and forth in the first 30 minutes of trading. But the tariffs are what's stopping Jay Powell, I think, from getting really excited about those rate cuts. Dixie under 100 is the lowest in 3 to 4 years. Yep. Dixie is low as well. People are selling off the dollar, which is also not a good thing. Again, look, I think this situation will be resolved. Let me make my stance very clear, but the 10-year back up to where it was high of day. I think it will be resolved. I'm not selling my stocks. I'm not liquidating my portfolio. I'm not saying everything's crashing. And if that does happen, then I'm going down with the ship because I'm not going to be the guy that tries to time it. Also, because I really do think a deal will get done and this will be over, right? So like in the moment, it's like annoying to see this happening. It's very interesting for me as someone who just cares about financial markets to try to analyze and like learn more deeply about why this is happening. But I think there's a solution. It's not as scary as like a pandemic breaking out and it's like, what's going to happen? I just don't know when the solution is. All I know is if yields keep surging, the solution might come way sooner than we think. It's just going to be a question of when. Why isn't Powell cutting? Powell's afraid that tariffs are inflationary. So it's like we cut shelter, we cut oil, we cut all these different things that are getting inflation to come down. But if we're going to reintroduce a ton of inflation, and now you can believe whatever you want about if tariffs are inflationary. I mean, like, no, there's a debate about that. I don't care how you think of it. What I care about is how the Fed thinks of it. And Goolsbee, Kashkari, James Bullard, Powell, all of them have the same opinion, which they had in 2018, which is that tariffs are inflationary. So it depends on what they think of it. You can disagree with them, but if they think that's how it plays out, oil, by the way, up a little bit right now as well, then they're not going to cut if they're afraid that tariffs are going to be a headwind to the overall progress on inflation. Dennis Rodman should talk to Xi Jinping. Dude, the United States should get Dennis Rodman on our side in negotiations. Oh my gosh. So I think that's kind of how, or that's at least why the Fed's not cutting. Now, could I see them justifying a cut even with these tariffs? Yes, because CPI and PPI are coming down dramatically. So I'm not saying the Fed's never going to cut even with the tariffs being the overhang. I'm just saying, and I'm just repeating what Kashkari said on CNBC today, they don't feel compelled to do it because they're making good progress on inflation and they want to counteract whatever the tariff inflation will be by continuing to bring inflation down. So it's really just a question of what they think is the best strategy. Do you think Bessent is getting ready right now to walk into the Oval Office to talk about the 10-year? I think Bessent didn't sleep last night, and I think Bessent is already there right now. And I think Bessent has whatever app that tracks the 10-year on his phone loaded up as the first app. It probably has his freaking wallpaper, and he's looking at this thing night and day. And this is not like a stock where it's like, oh, you're obsessed with the stock price going up or down. This is like the cost of capital controls the entire financial system. Like, what does it take to borrow money? And how much do people have to pay? How are people trading in between the spreads of what it means to borrow capital and then allocate that capital? How expensive is it to finance the way people think about a business, a car, a house, et cetera? All of this is determined by the cost of capital. And the Treasury Secretary is responsible for that. So I think he's probably looking at this right now and trying to come up with a solution. And if they're not, then I would imagine they're thinking that the solution will come naturally. I just don't know what it would look like. Let's get another update on China and see what's going on there, and then we'll keep going from there.
Tariff on our exports to China. Eunice Yoon in Beijing with more. Eunice, good morning.
Thanks, Sarah. Well, in 2 hours, China's 125% tariff is going to go into effect on all American products. This is in response to President Trump's 145% tariff, which the Commerce Ministry had described today as abnormally high and a joke. The government argues that at such high levels, Chinese are not going to want to buy American products. So the Commerce Ministry said that if President Trump raises tariffs again, China would ignore what it's calling his numbers game. Now, the focus here is to provide support for Chinese exporters, and it looks as though some of that is not only coming from the government, but also from the private sector. JD said that it's going to be $27 billion worth of Chinese exports this year to sell into the Chinese market. Alibaba's grocery chain Hema said it would help fast-track exporters to sell into China. And then to diversify markets further on a government level, the Chinese president Xi Jinping had met with the Spanish prime minister here and called on Europe to help China resist, quote, unilateral bullying. And of course, the irony here is that up until recently, the U.S. and Europe have been side by side trying to stop China from what they describe as coercive and unfair trade practices.
Now, there was another report last night, and we talked about this, I think, last week. But the report was last night that China, Japan, and South Korea central banks, so basically their version of the Federal Reserve, discussed U.S. tariffs in a meeting yesterday. That was the headline from Bloomberg. So you've got two of our allies, Japan and South Korea, Japan owning $1 trillion of our bonds, which I hope to God Japan's not selling our bonds, because that would be a whole different problem we have to deal with. Talking to an adversary, China, about how to navigate U.S. tariffs. And a lot of this has to do because semiconductors and pharmaceuticals flow throughout all three of the countries in terms of the raw materials. And so all of that coming together, I mean, if they're going to be isolated from the United States, at least in the midst of the negotiations, you know, they're going to have to form some alliance to talk to each other to be able to navigate this. So that headline also is probably not the most exciting for the bond market as our allies get closer to our adversaries. S&P 500 right here, up 0.2%. So still green on the day, not falling yet. JP Morgan's green as well. Again, really good earnings across the board. Robinhood down from up 3% to up 1%, but we haven't officially gone fully red currently right now. Elon is slowly getting out of the picture. You know, I mean, outside of Elon calling Peter Navarro dumber than a sack of bricks, yeah, I haven't heard much from Elon in this. And you know, what we heard from Elon yesterday wasn't good. Elon said he expects Doge will save $150 billion by fiscal year 2026, which is phenomenal. But he said on stage at Madison Square Garden they would be able to do $2 trillion. And then when he got into Doge, he said the target is $1 trillion. And now it's $150 billion. And that's another thing that I don't know if this is the reason for yields going up, but that could be part of the narrative on why yields are going higher, because the bond market's like, okay, if you guys are going to keep spending, we thought you were going to be cutting this $1 trillion from Doge, which would somewhat justify the tax cuts that Trump's trying to get passed through the House and the Senate. But if that's going to be $150 billion, but like, and maybe Elon's under promising and going to over deliver, but that's what he said. So the bond market has to take him at his word. So I don't know. No, it's not. No, people are saying he said they already found 150 billion. You can listen to what he said at the cabinet meeting. He said for fiscal year 2026, we are estimating to save 150 billion. Not that they've already saved 150 billion and they're on the path to 1 trillion. It was very clear. And that is, you know, another reason why potentially people are worried about our spending. Because again, if Trump gets his budget passed, which they're going to have to do through reconciliation because they don't have all the votes, but they got it passed through the House yesterday. they're going to have to, what he wants to do is cut taxes. And to do that, they're going to have to find a couple $1 trillion to be able to finance this over the next 10 years. No one knows where they're getting that money from. Now, Peter Navarro will say it's coming from tariffs. But if we don't even have the level of tariffs that we thought we were going to have on April 2nd because of all the negotiations, it's not going to be this magical tariff number. And if it is, what does that mean for all the other implications that come from getting all those tariffs? I mean, the popular headline that's going around right now is like, okay, we raise $700 billion a year from tariffs, but we lose $10 trillion from the stock market. That headline is not necessarily the most accurate. It's a bit misleading in terms of how they conceptualize it. But in the context of what the argument is trying to be made is that you're giving up a lot of core value in the U.S. becoming the reserve currency, people liking our stocks, people liking buying U.S. assets over European assets, et cetera. And you're getting $700 billion, if that, from tariffs. Like it's just like people are just like they're just calling the bond market's calling BS on it. They're like, this is not a plan. Or this is not a plan that makes any sense, or that meaningfully makes any sense. So it is. It's one of those things again that, again, I am not against tariffs. I think there is a way to implement them, and I think it can be meaningfully applied. I just think this particular source of tariffs are weird in terms of how they're being implemented. Let's finish up with Kashkari. So we heard him a little bit in the morning. Again, I thought there was some really important things he was saying about what's going on currently in the bond market. Let's watch a couple more minutes of this, and then we'll keep moving from there.
Many of my colleagues speaking in the past few days also echoed the focus of we have to make sure that long-run inflation expectations remain anchored. And so for me, that's got to be job one.
Neil, we've been having conversations all week about private credit. We spoke earlier with the CEO of Apollo, Mark Rowan. I'm curious how you think about the universe of private credit and loans through that mechanism, given the connection, talk about financial plumbing, back to the traditional banking system, which is to say that banks, in the last couple of years have gone, as much as they can into trying to provide leverage, if you will, into the private credit.
New high of day on the 10-year, 4.541. That's a new high of day on the 10-year currently right now.
System, and how much we should be talking about that or not.
I've dug into it quite a bit. Anytime we see an asset class grow as quickly as private credit has, it raises concerns is some systemic risk building. My analysis says that private credit funds generally are much, much less levered than banks. Say if a bank is 10-to-1, a private credit vehicle might be 1-to-1 leverage. And the sources of systemic risk are traditionally the intersection between leverage and maturity transformation, so borrowing short and lending long. The private credit funds that I've studied generally have much longer term funding. And so right now, I'm not seeing a systemic risk building in private credit, though it does represent leverage, and leverage across the economy is itself a source of economic risk. But I'm not seeing as much evidence as a source of financial stability risk that one might be worried about. So, bears watching. I don't want to declare all clear, but I don't see the fundamental kindling there that would suggest that it's particularly risky.
Neil, let me ask you a different question, which maybe has to do with just the strength of the economy and how you see these negotiations playing out, and therefore sort of what the Fed does or doesn't do about them.
S&P goes red. S&P goes red as we get these yields to come to a high of day currently right now.
Which is to say, we've now had a bunch of sort of deal-making conversations at the table about if you are an ally of the United States or a supposed ally and you're supposed to be making a deal, to the extent that some of these countries say, you know what, we're not going to do this, or we're going to take much more than 90 days, or we're not going to make a favorable deal, whatever. It doesn't turn out the way you'd want. I'm taking the most negative perspective of this, not from a political perspective, just as we're sort of like trying to figure out the risks of all of this. And so the question becomes, is there a Fed put on those negotiations, or is there an administration put on those negotiations, or neither?
Well, I certainly, Andrew, can't speak to what the administration will do. That's obviously up to them. And as Steve and I were talking about a few moments ago, the Fed cannot change the ultimate destination of where the economy is going to settle. All we can do is keep inflation in check and try to keep dislocations from disrupting that transition period. And so we're going to watch all of this very carefully and try to get inflation all the way back down and keep the labor market strong. But as you all have talked about for many, many days or weeks. A tariff pushes up inflation and on the margin pushes down economic activity. So it puts the Fed in a particularly challenging position. That's what we have.
I mean, you heard it right there. Kashkari is like, hey, a tariff is putting us in a challenging position. And that doesn't mean Trump needs to abandon tariffs. It just means the extent of the aggression of tariffs right now, which, again, I think are going to die down. I think eventually a deal will be made with a lot of countries, including China. At the moment, it's what's making the Fed a bit nervous right here, but not nervous enough to turn on the money printer.
To focus on, and those are the only tools that we have at our disposal.
Neil, I'm interested in timing as to when and how the Fed can respond. I can count on one hand minus three fingers the number of times that I've gotten a call from a Fed official saying they didn't say what they meant. And so when the Fed chair says something, I think he means it. And what he said last Friday was inflation over the coming quarters. And this question is about how long do you need for the inflation numbers to clear before you're confident enough to address the growth side of the mandate, that you're sure that this is a one-time increase in the price level? Because when I hear coming quarters, that brings me to like October, and I see the market priced in with rate cuts in June. So is the market overestimating your ability or the timing of your ability to feel confident that the tariff impulse is a one-time increase to the price level?
Well, I think answering your question, Steve, goes back to Andrew's question and Andrew's comment, which is it really is partly going to depend on how the negotiations go. If we see that deals, attractive deals or whatever the deals are, happen very quickly and we have some confidence of where the tariffs are going to settle, the U.S. tariffs and our trading partners, then I think that would give me more confidence that whatever these effects are going to be shorter lived. If the negotiations take a long time and that there's tit for tat and back and forth, and this is going to be an ongoing negotiation, then it'll take me more time, at least speaking for Neil, more time to reach that level of comfort. But you've heard over the past few days, most of my colleagues have come out and said, inflation is job one. We can't let inflation expectations get unanchored.
Neil, let me ask you about something you were just mentioning, inflation expectations.
We are seeing a pretty rapid increase in these yields, folks. 10-year 4.577, high of day. 30-year 4.955. Again, these yields are not scary if stocks were also going up, but they're not. S&P 500 now basically down 1% on the day after being up 0.5%. Tesla down 3%, Robinhood down 1%, PayPal down a bit, Bitcoin losing 83, back down to 81.7. The Q's down 1%. Nvidia's got, I think Nvidia covered calls should be safe today, unless we get a Trump pivot, which who knows how bad it gets and he announces something. But Nvidia's down, Palantir's down 2%. I mean, like all of this is reflecting based off the fact that yields are currently going a bit higher. There was a good chart as well that I want to show you guys about foreign exits from the United States. I'm gonna try to find the chart in a second, but it's the highest it's been in a decade in terms of foreign money leaving the United States. Where is it going? I don't know. Maybe to Europe, maybe to Japan, maybe to China, but it is leaving the United States. Now, you might be wondering, what is Mr. Buffett doing in all of this, right? What is Mr. Buffett doing? He's the guy who's sitting on $340 billion in cash, so there's obviously something that he could be doing right now that can easily take advantage of the pain in the financial markets. Maybe he should buy some stocks. Maybe he should buy some bonds. What is he going to do? Mr. Buffett just raised 90 billion yen, which is about $628 million, from selling Japanese bonds, or rather, I should say, issuing Japanese bonds. And by doing that, Berkshire essentially is receiving cash from investors who buy the bonds, and in return, Berkshire is promising them to pay the interest over time and repay the principal when the bonds mature. I don't know the exact rate that they got, but let's just say it's 2%. That means they're borrowing 90 billion and they're agreeing to pay 2% on that 90 billion. Why? Because Buffett thinks he can take that 90 billion and get way more than 2%. And he's going to keep the difference in between what the price is of the capital, 2%, 4%, whatever it is, and the return he can get on that capital. Why is this interesting? The dude already has $340 billion in cash. This is why Buffett is the GOAT. He already has so much money, but he's seeing what's happening in the currency denominations of the yen to the dollar, aka the yen getting stronger, the dollar getting weaker. And what is he doing? He's issuing debt in the context of the yen in Japan, because the yen is strong right now, and raising cash to then buy most likely Japanese assets. He did take a stake in 5 Japanese trading houses. That headline was about 2 weeks ago. And he's not touching a single penny of the $340 billion that he has in cash to be able to buy whatever Japanese stocks he wants to buy. I mean, dude, talk about someone who's just incredible in terms of being able to navigate all these issues. But that's what Buffett's doing right now, and I think that's going to, reward him in the future. But obviously, the bond market is still pretty upset in terms of this tariff volatility.
Have tempered somewhat because of the housing component coming down, but mortgage prices have jumped pretty substantially this week. Our colleague Diana Olick, who covers the housing market, had a story that lays out another potential problem with this. The Chinese are big owners of mortgage-backed securities. They've already been dropping their positions on that. I think as of the end of September, it had dropped by more than 8% than where they started the year. By the beginning of December, it was down 20%. If they decide to retaliate by dropping mortgage-backed securities, what would that in turn mean for pressure on the U.S. housing market and inflation along with that?
Well, I think mortgages, when we do quantitative easing, we've done both the mortgage-backed securities and the treasuries. They tend to be quite linked, and not perfectly linked, but they are linked. So I think over the treasury market and the mortgage market, you would continue to see yields continue to climb. And that'll really put a continued freeze on the housing market. So we've seen a dearth of activity in housing. It's been expensive for buyers to come in. There have been very few transactions. I think you would continue to see that happen. And in some sense, you might push up inflation a little bit, but if sales aren't happening, it's not clear to me what that'll end up doing to prices. I think more likely you just see less activity, and it'd be somewhat of a drag on U.S. economic growth, because the housing market itself is an important sector of the U.S. economy in terms of building homes and furnishing homes, et cetera.
For people who want to buy a house and have been saving and thinking they get to that point, that's a deal killer.
It is. It's a real challenge, and you end up just having a frozen housing market per se. The longer that mortgage rates end up being higher, the higher that mortgage rates go.
Which is obviously not good for the average American who wants to buy a house and has to finance it at some ridiculous 7 or 8% number. At least in this era. I know rates were high back in the 90s and stuff, but like in this era, those rates are just, significantly higher than what we've been used to. So you got an issue with China owning a lot of mortgage-backed securities as well. I mean, this thing gets really, really deep the more you dig into it. And the good thing about this is it can easily be resolved if we want to get a deal done, which I am still of the belief we will get a deal done. Not selling a single stock, not taking any dramatic changes because of this. But I mean, in the meantime, until we do, this is what we're dealing with. MicroStrategy right here up about 2.4%. Broadcom still up. Some of these stocks still kind of green. Tech looks like it's about to go red with the Qs. Google holding on by a thread. NVIDIA barely holding on. We could see those go red. Again, 10-year 4.559, 30-year 4.939. Those are relatively high on a day like today. Trump has not tweeted anything yet. I have it loaded up. If he tweets anything, I will show you guys. The last tweet was about daylight saving time. So no tweet yet from him. This is wild, bro. This is like, this is one of those things where you sit back and you're like, you grab some popcorn, and if you can afford the popcorn, I'm being hyperbolic, but like you get my point, right? It's one of those things where you're looking at it and you're like, holy crap, like forget how much money I might be losing. It's like, this is something that could turn into a credit event. And at the same time, it can easily be solved, which is why, in my opinion, at least what I'm not selling. There's no understanding of timing any of this, because within a tweet, this is all over. Like literally, this is all over within one deal, one tweet, one whatever form of progress that the market needs. At the end of the day, these are amazing companies in the United States. They're putting up amazing numbers. The banks had amazing earnings. We have the best economy in the world, yada, yada, all the good things about America. We just need to figure out what is the stance on trade policy to move forward. Tesla right here down about 2.5% of the day. And yeah, because this feels self-inflicted, obviously, that's also some of the pain, or the more of the pain, right? Because again, I've said this time and time again, people are okay with their stocks going down. What they're not okay with is not knowing why their stocks are going down. Like you have to be able to handle volatility as an investor, but unfounded, unknown volatility. And then you find out the volatility is because of tariffs, which the administration, I think, has not done a really good job convincing the American people of like, this is the end all be all solution. Navarro sucks at explaining it. Lutnick sucks at explaining it. I would say Trump is better than Lutnick and Navarro at actually explaining why we need it. Elon's not really helped in explaining it. In fact, Elon's doubled down on why we probably don't need it by calling Navarro an idiot. And then Besant kind of is like tippy-toeing around it because he doesn't believe in it. Besant believes in a 10% flat rate, if that, because one of his mentors, Druckenmiller, also doesn't believe in it. And you could say Besant's wrong, but regardless of it, the administration really hasn't done the best job in convincing people. Now, like if you're a super MAGA faithful, you are convinced. Like I've talked to some people that are just like MAGA all the way, and they're like, nope, short-term pain for long-term gain. I don't care about my stocks. I care about the future of the country, yada, 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 yada. There's a cohort of the population that feel like that, but at what point do they start thinking, because I've met some other people that were super MAGA in 2024, and I've had private messages with them, and they're like, I didn't vote for this. Like I did not vote for that. I did not vote for this shit. And I think there's more people that support it than don't support it for now. But obviously it can only go so far until, there is real support that is lost. So we got to see eventually how this is going to play out and if we get any announcements today to make this play out as well.
This sort of triple whammy of selling stocks, selling bonds, selling the U.S. dollar, and that leads to questions about who is unloading U.S. assets. And what we're seeing is there a crisis of confidence and credibility. The U.S. exceptionalism trade has been the trade where it's, bet on the U.S. AI companies, bet on U.S. bond market because it's a riskless asset. All of these things come into question when the U.S. upends the global trading system. I don't want to overplay it, but these are the conversations that I'm having with.
And I agree with Sarah right there. Like the reason she's being cautious of not overplaying it is because you don't want to fearmonger. And that is not what I'm trying to do either. And if I was selling my stocks, I think that would be a more obvious sign of like, oh, Amit's really scared. But it's more so a question of these are the conversations that are happening that I think if we all care about the financial markets, we have to analyze. But we also know this can be solved pretty easily. So it's not trying to say the world's ending. It's trying to say, look, there is a chance things could get bad, but we have to figure out eventually when it stops. And I have faith that Trump and Besant will figure it out. I just don't know when.
With folks on the desks right now. And I think the big question is there going to be a policy response from the Federal Reserve, from the administration? How bad does it have to get out there in the bond market where you're selling bonds at a time where the market is overall spooked to do this? And when I just spoke to some folks on a bond desk, and they said it's the people you don't want selling. What does that mean? Sovereigns, foreigners.
Mm-hmm. Wow, that's interesting. So she spoke to people on the bond desk, and they're telling her, bond desk is the people that trade bonds for a living. She's saying that they told her it's other countries, which obviously that points to potentially China as well.
People, long money holding, central banks potentially. So how bad does that get?
All right. What are they citing as the reason? I mean, we spoke to Larry Fink earlier. I brought this up with him, of course, and unexpectedly, he seemed to think it was not necessarily a function of that, but as much as inflation expectations and the fact that it's going to be far higher that are behind this move.
Market-based inflation expectations are crashing right now.
Well,
honestly.
And beyond that, I mean, look, and that's been Larry's thing for the last year, is that inflation's higher than everyone thinks. We saw a 50 basis point move higher in the 10-year this week. We saw, I don't know, a 0.15% move higher in Fed funds. So that big gap in there, that's not inflation.
Yeah.
Like that's something else going on.
Real yields going up.
Yes.
Basically, the world demanding a higher premium to own.
Right. In other words, a
if
risk
it was just
premium for a
inflation, you'd see
riskless
the Fed funds move in conjunction with it. It's a big move, and it's completely reversed. And I think that's what people are watching. The dollar is also the center of the universe right now. Always has been, but we are seeing some sharp volatility in selling. I noted the 2% sell-off yesterday. There's a great chart going around the trading desk that shows how bad this week was for the dollar relative to other weeks in history. Look at this. So there's that bottom move, and you can see where like outsized, terrible week at the very end there for the dollar, comparable
20, right? Yeah.
to other times
22.
we've seen that. Here's just a number to keep in mind: $33 trillion. That's how much U.S. debt and U.S. stocks are owned by foreigners. It's
That's
a huge
debt and
number.
stock. That's equity
it's debt
and
stock.
yeah,
So
right.
it's about a third, a little more than a third of the U.S. bond market,
Yep.
and a significant chunk of U.S. stocks as well. It just means that when this unwinds, it's a risk. And if you're going to pick a fight with the world on trade, that's a risk. I don't want to be too doomy and gloomy here, but that's what folks in the markets are watching. There's good news today, too. I mean, the good news today is that the real economy heading into all this is doing okay. PPI coming in at the negative number, wholesale inflation, negative 0.4%. That was good to see. Credit card spending. Bank of America put out a credit card spending number. They say for the month of March, up 2.2%. Retail sales looks good. So consumers are continuing to spend. JP Morgan, CFO this morning on the call talking about retailers and consumers in America, I thought sounded very positive. Listen.
We have seen some of the retailers and other folks talking about weaknesses in the lower income segment. And I think when we look at our card data and also, our cash buffers and people's checking accounts, of course, it is true that it is relatively weaker in the lower income segment. But when you take a step back and you ask, are we seeing signs of distress in the lower income segment? The answer is no. So sure, the margin cash buffers are lower, and you see some rotation of spend, and spending is a little bit weaker than it was in the peak spending moments. But actually, some of the increases in spending that we're seeing in April are actually coming from the lower income segment.
Increases in spending in the lower income. Aside from that, I mean, we don't want to see weakness on the low income, but we've heard that on every quarter from retail and banks in the last year and a half. And they said that there's no distress. So, and there's no big, worries out there. I haven't seen it so far from Wells Fargo, JP Morgan. I mean, they're all sounding the alarm.
Now, the issue is here, if lower income folks are still spending more money and things at the dollar store, for example, get really expensive because what do you know? The dollar store gets everything from China and there's aggressive tariffs, which are currently in place, and lower income folks stop spending. I mean, you start getting cohorts of the American population that aren't spending anymore. That's when you really do have real demand destruction. And that obviously is going to show up in company earnings as well. S&P 500 right here, down about 0.2% of the day. Relatively tame. Again, yields are still being annoying right now. The 10-year at 4.54 still, the 30-year at 4.9. But stocks are not like getting decimated yet. I mean, yesterday the S&P was down 4%. That was ugly, right? A lot of stocks were down about 5 to 7%. But today, down 1%, 2%. S&P barely down 0.3%. Like it's not like the market's aggressively getting sold off right here. And maybe it's because people are stepping in and they're saying, all right, look, if the bond market is getting that bad, Trump's going to step in. He's going to say something. When he says something, the bond market, the yields will come down and then stocks will go up. So you could have people potentially trying to front run that by stepping in before that happens. Fear and greed is at 13, which is lower than 17. So maybe that's an argument for why stocks aren't falling off a cliff right now. Someone said, can Trump executive order to buy 10 years? The answer is no. That is up to the Fed. Now, I think if Trump had the authority to do that, he would do it in a second. But the Fed has to be the one to determine. I remember during COVID, Trump didn't tell the Fed to do it. Jay Powell came out himself and he said, we're doing it. We're turning on the money printer. So the Fed has the authority to do that, and they will do it if they think they need to do it. But Trump can't literally force them to do it. But obviously, if someone bought some treasuries right now, that would not be the worst thing. VIX 45. Yeah, VIX right here is up 5% on 11% on the day. All right. VIX getting some momentum. If you've been trading the VIX, you've probably had a lot of fun past couple of weeks, or really past couple of days, as it's been going up and down. But again, it's indicating that there's obviously a ton of volatility in the current markets. Nvidia continues to fall 108 from 110. I mean, it's so funny because it's like, I know we all look at short-term stock movements, but like all of this green or red doesn't matter until we get some clarity on tariffs. And 2 days ago, we got the biggest clarity we've gotten since April 2nd, which is that 90-day pause. And then yesterday, the market ended up not caring about it. As simply as the market could not care about how good your earnings are. Like it's almost like it was an earnings report that beat on EPS and revenue. And then the market's like, yeah, but we still kind of just don't like it. even though they liked it initially. Which is basically saying you got to put up even better earnings, right? Or you got to fix some structural problems in your company for us to get excited about earnings growth. This is the bond market saying, Trump, you've got to like actually give us some more juice than a 90-day pause to get us excited to buy bonds. Do you remember when we were so excited to see Nvidia at 125? Yes, we were there two weeks ago, right? At 125? Or no, it was not 125. It was like 120, 119. Yeah, it's just like, it's, I don't know. I still, I'm still confident we are going to see much better prices on equities near the end of the year. But all of it at this point depends on these tariff negotiations. And as of now, the market definitely doesn't feel that negotiations are happening anytime soon. But again, one tweet changes it. Trump has not tweeted anything yet, refreshing his feed. No argument yet by Trump. Dixie as well. Again, that's we haven't dived into it too deeply, but Dixie below 100, that is also an issue. People are selling the USD. Like the dollar as the reserve currency is one of the reasons the United States gets to be the United States. And it's okay to have a weak, it's okay to not have a super strong dollar, but this one's now looking more aggressively weak than what you would think. And that's what's also causing some issues as well. Amit, did you sleep well yesterday after a 5-hour nonstop stream? Yeah, the market closed for those that were confused when they clicked on it and saw 5 hours. I don't know how we did 5 hours, but like after 2 hours, which was like the actual market close, for the next 3 hours, we just started talking about anything. And then we saw futures open up because I stayed on until 6. And then we saw yields start exploding and we talked about that. So yeah, that's why that ended up being 5 hours. But yes, I got some good sleep after that. And now we're here with yields continuing to be higher. This wasn't the face ripper I had in mind. Yeah, this is why I think Tom Lee literally said, I apologize for thinking that Trump wouldn't violate a core covenant of capitalism. Like when I read that apology, it was just like even the choice of words, he was upset. He was mad. And then Dan Ives, the same thing, dude. Dan Ives is freaking pissed off. Like he absolutely can't believe that this is the way that it's playing out. But this is how he's feeling right now. And Dan is so pissed off to the point where Dan's not even thinking that tech earnings are going to matter, because he's saying now the guidance is so shook, and now the ability to imagine that guidance would be meaningful given all the volatility is hard to lay out. Here's Larry Fink on CNBC 20 minutes ago. Here's what he had to say about the U.S. and its current state, and if we're in a recession or not.
Recession in the United States.
As I said on Monday at a talk that I gave at the New York Economic Club, I think we're very close, if not in a recession now. What may be...
You don't need that.
Good. What may be happening is a lot of people are buying in advance of the elevated increases, like lines around Apple stores buying iPhones and all that stuff. But I believe all the uncertainty is really making everyone pause. And everyone's wait and see. And so I think you're going to see this across the board and just say slow down until we have more certainty. Yeah. And, we now have a 90-day pause on the reciprocal tariffs. That means longer, more elevated uncertainty.
Speaking of pauses, let's take a quick pause. Let's get the opening bell. We'll be right back to Larry for a conversation.
Okay, let me fast forward that. All right.
Know what's coming. I have nothing to expect, and so I'm keeping my head down. Is that a fair way to sort of characterize?
I think that's a bad answer, because today you need to run into the uncertainty and try to find solutions. Okay. So keeping your head down, I would not like that as an answer as a shareholder with any CEO.
Right.
I mean, to me, this is an opportunity to look for opportunities. And because of all our clients having uncertainty, we are spending more time with more conversation with more clients globally than any time. Our job now is...
S&P goes green. I think this is the 7th flip-flop of the S&P today. Bond yields are still up. They haven't moved. But the S&P goes up 0.2% now after being down 0.5%.
To be, helping, calming, giving them ideas. So if a CEO said, I'm going to keep my head down.
Well, I guess that was the way one characterized it. But I guess it's the uncertainty itself that creates an inability to do long-term planning in terms of capital allocation.
There's
right
no
now.
question CapEx is falling right now until you have better understanding where should that CapEx go. But I do believe, as I said in my talk this morning, I do believe the mega trends are still with us, whether it's AI, data centers, infrastructure, the whole reorientation of our economy. So I think the mega force trends are not going to change by what is happening now, but maybe the execution of some of these trends may be delayed, maybe pushed out longer. But I still remain to be optimistic over the long run. Yes, we have to recalibrate. Yes, I do believe we're probably starting, if not, we're in a recession. Yes, I think the market is still underestimating how high inflation can get. If you factor in all the tariffs,
right,
you factor in all these other issues, it's going to be quite additive. I mean, I read in a report that if you just take the tariffs in the cost of home building, the average new home could be up as much as 26%. We already have a housing affordability problem.
None of this sounds any good to me, Larry. I mean, and it's all self-inflicted, by the way. None of it needed to happen.
This is not a pandemic. This is not a financial crisis. This is something that we've created. As I said also on Monday, the United States post-World War II was a global stabilizer. We are the global destabilizer.
Right.
Now, that's a very, that's a very hard thing to say, because I pride ourselves of being, bringing the leadership, bringing the conversations. But I will say the power of U.S. capitalism is still alive. I will say more and more times clients worldwide are asking for our, at least at the CEO level, they're asking for our vision, our views. They still want to engage. They still want to build.
So Fink trying to be positive about the situation. Obviously, he has a stock price that he needs to keep afloat. S&P 500 right there up 0.27%. But he's acknowledging the reality of the fact that the tariffs are creating a decent amount of uncertainty that's putting fear into a lot of investors, and obviously fear into the bond markets right now in terms of these yields going higher. Christopher Patel, good morning to you, sir.
If that's what you could call it, dude. What we're seeing right now is a goddamn tragedy, dude, compared to what we were coming with. Trump and his obsession with tariffs, man. It's insane at this point.
How do you think this plays out? The 10-year obviously aggressively rising along with the 30-year. My opinion is it's bad, but it can get fixed really quick. Is that your opinion?
Maybe. I mean, he's definitely got, Trump's got a...
Look, Chris, turn the gain down a little on your mic. It's a little bit too high.
Okay, hold on 1 second.
Or just like...
How's that?
That's perfect. You're good.
All right. So at this point, we've played this game of insane tariffs. All right. And this has basically been... I mean, I'll give you the backstory on this whole thing. Trump has always been a tariff guy. I don't think he understands economics, honestly. I really don't think he's a very intelligent person anymore. I tried to rationalize everything that he's doing and hoping that it was art of the deal. But, art of the deal wasn't even written by him. It was actually a ghostwriter that did everything. I mean...
I did not know that. But most of these guys are ghostwriters that do this.
Yeah, I know. But what's interesting is the person who actually did art of the deal, one of the things he said is he regrets ever putting that out there because it ended up making Trump sound more intelligent than he actually is. And I didn't want to believe it. To be honest, I really I tried to just try to rationalize a lot of the things that he was doing. And from everything that I'm seeing now, I don't think that there's a single rational thought in his brain. I think a lot of the times he's like a bull in the china shop. And the only saving grace that he really has is people around him who sometimes control his chaos. The first term, there was a lot more control over what he was able to do in terms of breaking the world order. And this time, there's not as many people. He's put a lot of, basically, in my opinion, a lot of court jesters in his administration who were basically like, "No, you're the smartest person in the room, Mr. President." Instead of actually telling him what he needs to hear. I think.
So how do you think they solve this then? Does he come out and say?
Let me finish. There's maybe a few people in the administration that actually have the balls to stand up to him and actually knows how to fix this thing. And one of them is Scott Bessent if Scott Bessent leaves this administration, bro, I'm selling everything. I'm going to cash. Like, there's not even a doubt in my brain that that's what I'm going to do. But as long as Scott Bessent is there, I'm confident that the markets are going to move in the right direction eventually. But yeah, so go ahead.
So you're, I guess that transitions into my point. You're still bullish that Bessent can do something to resolve what could be a credit crisis.
Yeah.
Which is why you're not selling anything yet.
No, I'm not selling anything. There's no point if you believe in the long-term future of America. You don't have to sell anything. So
Okay,
I think.
so then my next question is, what do you think Bessent is going to do? Like, because they can't get a China deal in the next couple hours. So how does he calm down the bond markets?
I don't know. He'll figure that out. One of the things that he's got to do is get Trump off his tariff stool. Think of this country right now. Basically, Trump is saying, "Let's go to the edge together," right? And he's basically every day he's like, basically like pushing you closer to the edge, and you're like, "Hey, wait a second, what the hell is going on?" Well, the bond market has a way of telling you, like, "Look, dude, you're kind of messing with the wrong system right now."
Right.
And that fear is causing people to panic. I wouldn't panic. A lot of the systems that are out there, they're there because people like this exist, and they'll self-correct. And the one good thing about Trump is that he is too much of an ego-driven person to let things crash, especially on his watch. No matter how ideological we all believe him to be, but he believes in this, believes in that. At the end of the day, if the bond market and the stock market start collapsing on his watch, he'll pivot his entire ideology. And then, what's funny? All his court jesters have to come in and be like, "Oh my God, look, Trump, he's so smart. This was his plan all along." And it's like, bro, we see through we see through
Yeah,
this.
no, to your point, and I think everyone saw this yesterday, the cabinet meeting. I mean, I said they should have ordered Krispy Kremes given how much glaze was going. I mean, it was ridiculous, but
Yeah.
I see your point. So, okay, so this is why I agree with you. And even though people can agree with you, disagree with you politically, I think they agree with your central argument, which is that Trump's ego, along with Bessent's expertise, is enough to stop an entire stock market depression, because they know that they don't want that being the reputation. They know they'll get creamed in the midterms. So the nature of experiencing this as investors is we literally just have to live through it and wait, right?
Thank God we live in a democracy, dude. Because democracies, this is the one good thing. When bad leaders come in and they make stupid bonehead decisions, democracies are the only form of government that you can actually challenge the bonehead decision. And then in 4 years, 2 years, 6 years, whatever, you can get rid of them, right? As an example, you compare and contrast this to China. China, they had a lot of stupid decisions under Xi Jinping and basically cratered their economy right now. So as an example, they blew up a property bubble in China like there's no tomorrow.
Yeah.
Okay. And this was all because our dear leader wanted to have a nonstop GDP growth and basically forced all the state-owned enterprises to build all this dumb shit that they might not even have needed. But the thing is, they can't get rid of this guy, right? So their markets are driven more based on my dear leader philosophy rather than reality. The good thing with us and capitalism is that when you start to see capitalism, when you start to see bad allocation and bad decisions, the capital markets will slap you in the face and be like, hey, motherfucker, you need to change course. And as far as I can tell, Trump doesn't have the backing of the GOP that he thinks he does, especially among mega donors who have basically floated the GOP for like decades, are turning on him right now. So I think there's a limited window where he's going to be able to cause damage, but then the guardrails of sanity will eventually raise, and that's when we could probably see a nice, move back to sanity again. But yeah, a lot of the stuff that you're seeing right now, it's just insane things that this guy is basically putting out there. I honestly did not believe that he was this dumb. But every day that's like literally that the more I'm researching and trying to rationalize some of the moves that he's making, the less I'm confident that this guy knows what he's doing. And instead, he's just basically putting things out there that, sound really good on paper. Look, there's a lot of things that sound really good on paper. Oh, let's have pizza every night. And then you wake up 6 months later, you're going to be like 400 pounds, so you can't do things based on just everything like that. So
what do you think about the PPI report today?
I mean, it's just showing you that things are coming down, but they're coming down not for good reasons. You know, what's more important than PPI? Screw that nonsense. Go to Michigan survey.
Yeah, it was bad.
That is terrible. Okay. If your inflation expectations are that high, you are in a world of hurt right now. Dude, you know how many small business people are on TikTok right now saying, look, I had product coming in from China. It's being tariffed at 140%. Like, I had nothing to do with this thing. And you're asking hundreds, if not thousands, of small businesses to flip on a script and pay all this additional cost. Bro, you are asking for not a recession at this point, a depression if this goes on for too long, you know. So like I said, the market's only reacting to the stupidity of the administration. Thank God we live in a capitalist democratic society where when things get out of hand, you know, the market has a way of slapping you in the face and, you know, hopefully bringing you back to your senses. And luckily politically, the democratic angle comes in where you're going to have a party and you're going to have an opposition. The opposition's already waiting to impeach you the minute that they get in power. So your incentive is, I better fix this shit. Otherwise, come 2026 or 2027, the Democrats are going to take power again. And I'm going to have another 2 years worth of, you know, hearings on why I took a shit on Tuesday and didn't take one on Wednesday.
No, that's fair. I mean, look, he has to be incentivized by not only the economy, but his ability to stay in power to fix this, which again, in the midst of everything you're saying, you agree with me here, which is that it will be fixed. It's just a question of when and how much volatility do we have to deal with until it gets fixed.
As far as I can tell, 90 days is probably right. Like mid
I don't think we have 90 days, bro. These bond yields are giving us maybe 90 hours. Like,
nah, it'll be fine. I don't even be more concerned with policy right now. If he keeps on with this tariff policy, the insane tariff policy for longer and longer, then you're actually going to break real things in the economy. You're going to break people. Like people who shouldn't be. Look, no one should be feeling bad for anyone that owns stocks right now. Okay, fuck that. Stocks will recover. You know who you should be feeling bad for? The small business owner who's basically got a business that runs because they buy and sell goods internationally and then sell it here in the US or sell it domestically or sell it overseas. They're getting absolutely murdered right now by this policy indecision. Okay.
yeah.
No matter how much money we lose, bro, we'll come back. We'll make it back. You're talking about small businesses that had the freaking courage to stand up, build their businesses, and then one guy gets in power and says, you know what, I'm going to take on the world order and basically screws their entire business.
Is it worth it? Is it worth taking on the world order, Kris?
No, it's not.
Why?
Because we're in charge of it. Why would you fight the system that benefits you? Like, that's the part that's retarded about this whole thing. Damn it, I said the R word again. Whatever. I'm sorry.
Okay, people are saying much meaner words about you in the chat, so that's
yeah, it's fine. You can't take 40 years of conditioning with R. And I know there's a ton of MAGA Republicans that are like, no, my dear leader can't do wrong in the chat. You're fine. You know, that if you want to believe that your cult leader is the greatest person on the planet, go for it. You know, that's on you. Me, I'm just thinking of this as a rational person. And a rational person says, don't screw the world order that you're in charge of. You know,
do you agree with this argument? Kashkari said this today, that the reason we have a trade deficit is essentially because we get to print our money and become the world's reserve currency, and that is what's inevitably going to happen when you have a deficit. That we're going to import more from other countries. And is that okay? Is Trump thinking in the wrong paradigm to try to ruin that way we've been operating for the past 100 years?
He's been thinking like this for literally like decades now. You know, that all these countries are out here stealing from the US. If you think about it, Amit, if you told me I can buy products from overseas below cost of manufacturing, and all I have to give them is paper that, believe it or not, over time diminishes, because if I'm giving you 2-3% paper and there's 2-3% inflation, what are you really getting out of this whole thing?
Yeah.
Right. Yeah. And on the other hand, you're buying goods and services that are enriching your country, and then you're selling things back. So I think a lot of people don't realize the trade deficit is actually just a capital surplus. Whenever you take money, right, and you give it to the Chinese and you buy stuff from them, what do the Chinese do with that money? They don't just put it in a vault somewhere. No, they buy goods and services, but they also buy capital goods from us, and
Right.
also at the same time invest in our companies. Like you look at Norway, right? Norway has the largest one of the largest trust funds on the planet. Do you know how like how much like equity exposure they have to the United States?
A lot.
Their
They own a lot
entire
of stuff.
their entire sovereign wealth fund is invested in US equities. The entire planet is invested in US equities because our companies are the best companies on the planet. And so Trump is saying, you know what? I don't like that. Let me screw everyone up. We should not have the best companies on the planet. You know, we have a trade deficit. We need to manufacture, we need to put people back in the coal mines. It's like, stop.
Okay, well, let me. So Trump, I think you would agree Trump is bringing up some legitimate problems that exist across the world in regards to trade policies. What would you suggest if you were an advisor instead of starting a trade war? How would do we tax the rich? Like, how do we deal with this stuff?
So I think a couple of things have to be done immediately. First, your main goal should be control inflation, right?
Yeah.
Like right now, what you're doing is inflating everything. You need to give market certainty so that businesses can allocate capital. If you look at that, did you hear what the report was from JP Morgan
Yeah, yeah.
regarding uncertainty? So you got to get markets back to being certain again that you're not insane. So that's the first thing. And you need to give people who are rational people in your administration more authority to speak. And thank God that he's actually doing that with Scott Bessent. So that's actually a good part. The next thing you got to do is you really have to realign and remember that your trade relationships with Mexico and Canada, they're not your enemies, dude. They're our freaking biggest allies that are out there. And this concept of, oh, they're trying to steal from us, I agree to some degree that maybe you want to say, look, y'all need to invest more in U.S. consumption, like U.S. goods consumption, but not to the degree where you're basically treating them like enemies.
Real quick, before you continue, Williams, we got a quote from him just now. He says, current rate stance remains appropriate. Tariffs will boost inflation to 4% by the end of this year.
I'm telling he's really got to get off of this tariff nonsense. I mean, free trade works in our favor. Go back to free trade again, And I fully expect Scott Bessent to sign trade deals where their trade barriers go down, our trade barriers go down, and we end up doing well. And that's hopefully the end result.
You would resolve it by deregulating, pro-growth, inflation down, and we grow out of this mess. Essentially, that would be your take.
Pretty much.
Which is what I think Trump ran on, but that little tariff part that no one took seriously, that ended up.
He went insane, dude. He went insane with that. And the funny thing is, he put people in power like Peter Navarro and Lutnick that instead of saying, look, this is insane, they actually supported that insanity. I really didn't realize how much of an idiot he was.
Speaking of Navarro, let's watch this quick clip of him from yesterday.
It's just a normal retracement after a big day. It's no big deal. Let's look at where we are. And this is what's the good news for the American people. If you simply look where we are now, we've got a 10% global tariff in place, and we're taking in about probably $4 billion a day. Well, we were losing $4 billion. We're taking in about $2 or $3 billion now. So that's all to the good. We're clawing back some of that dangerous trade deficit. And we've set a 90-day negotiation in motion where at least 90 countries now want to come in and see us. And what they're going to do is literally offer us collectively hundreds and hundreds of billions of dollars of opportunity to bring manufacturing here, to sell energy there, and do all sorts of things to balance our trade. We are in a beautiful place. And look, folks in the media keep trying to stir people up, panic people, when yesterday we had the perfect result from the kind of negotiation Donald Trump does. Now, the bond market, I don't know what you're upset about the bond market. We have yields coming down, which is great news for...
Obviously, that's not the case because yields are going up right now.
People who want to get a mortgage and home builders and all of that market. And for people who have consumer credit debt, that's good news. For people who want to go out and buy a car.
We've seen more selling of U.S. Treasuries, which again is the foundation of
the
the whole
auction
thing.
went fine yesterday. To be clear, the auction went fine. And for your viewers, what they had, the Treasury opens up a window for I think something like 15 or 30 minutes, and there's a bid, and we had a lot of participation in it. It went fine, and because the rest of the world thinks this is the best place to be. So
the auction did go fine, but at the same time, yields are down, so people ended up selling. Kris, your reaction to that?
The smartest man on, well, I wouldn't say the smartest man, the richest man on the planet, Elon Musk, basically called him Peter Retardo. Okay. There's a reason for it. Okay. Elon doesn't just go out there and say some shit like that. Peter understands that this guy, he wrote a bunch of economic papers that said tariffs were good. And he cited an economist named Ron Vero, and it was himself.
Yeah.
Like, that's who basically Trump has put in charge of advising him on trade. Now, Trump has surrounded himself with a bunch of sycophants who basically praise him every day, saying, Mr. President, you're the smartest guy in the world, instead of actually telling him. I had to deal with this with a former boss of mine. All right. I was hired, I had a position, they hired a new guy. He ended up becoming my boss. And he was a good guy, but his personality was borderline egotistical.
It was narcissistic, essentially.
Yeah. And so what happened was when people needed something, right, they would basically he would just be very aggressive to them and they wouldn't like it. So they would come to me and be like, hey, Kris, blah, blah, can you help me with this? And I'd do it. Right. And the entire time I had to pretend that all the ideas were his ideas. Okay. So that he looked good. Now, the funny thing is, this went on for a few years and I got my benefits out of it too, because I was close to the proximity of this guy's authoritative ability. I was able to get, more things done, which ended up working in my favor. But when I left, I knew his days were numbered. When I left, literally within a year, they pushed him out of the hospital that I worked at. And then a year later, he went to another hospital and then he got walked out of the hospital. So the thing is, by the way, if you've ever been in corporate or any administrative roles, if someone walks you out, that is the ultimate sign that you done fucked up. Okay. So he basically got into that position and then he ended up there. So it just goes to show that usually when it comes to work, and I'm sure that people in the chat, you guys have that boss who's fucking absolutely crazy, is an idiot, egotistical, and it's your job to basically just keep the place.
Massage their ego.
Huh?
Massage their ego.
Well, massage their ego, but also keep the place from burning itself down.
Yeah.
Yeah.
And
the funny thing is, we've got that with Trump right now. With Trump, literally, maybe he's good at real estate, but dude, there's a reason why he had 6 businesses go down and fail. Right? It's not rocket science anymore. Dude, Trump Steaks, Trump University. The funny thing is, I was reading the Bob Woodward book, and I really didn't. I hesitated from looking at it again. And look, it's actually been quite documented. This guy's philosophy on things. He likes to try things, and if they break, he's like, oh, I can just fix it. And I'm like, the U.S. economy is not in that same boat, dude. So I think right now Trump is playing the game. Luckily, hopefully, the systems around the U.S., both economic and trade, are strong enough to withstand the bad decisions of this president. And eventually, the one good thing that Trump has is that he's got some decent people around him in the form of Scott Bessent, and Jerome Powell's on the other end at the Fed, making sure that, Trump is not going absolutely crazy and getting him to lower interest rates while we're still in a inflationary environment, right? I'm sure that there's immense pressure on Powell to cut rates sooner than later, but Powell is sticking to his gun and saying not until inflation comes down, So there's still some reasonable people out there. Hopefully Trump wakes up and says this tariff thing is a failure on my part. I need to calm and soothe the markets, and then we can see some movement higher going forward. And he just claims the victory. And I'm sure the funny thing is Scott Besson and all these guys, they'll just be like, "Oh, look, this is the art of the deal. This was the intent the entire time." And it's like, no, bro. Everyone's just covering for this guy's I don't know, whatever you want to call it.
And I do think that's going to happen. And I think you think, and eventually, I think, if you're invested in the markets, you think you have to believe that's going to happen. The question is just when. Kris, last question for you. Do you think Bitcoin is the answer in all of this?
No, I don't even know anything about Bitcoin like that, like how this works in geopolitics. All I know is I think there's a lot of people, especially on the MAGA right, they want to believe that this guy is the best guy on the planet, that he actually cares for us. And I'm sure that at a surface level, he probably does. Like a lot of the stuff that he's saying does resonate with the average person that's like, I used to work at a steel mill and I got laid off, you know, and that's, I understand that. That's understandable. The problem is like, hey, you gotta understand that doing steel work in the US is not always the best course of action every single time. I think steel production should still be in the US. I'm not disagreeing with that, but everything has to be a case by case basis. Like I want steel production back in the US, but I don't need t-shirt production. We don't need to make Nikes here. Let the countries outside the country with way lower wages do that. I don't know if there's any Americans that want to sign up to go, yeah, let me go make some shoes. Are you going to, Amit, do you want to go make some shoes?
Not really. I feel your point right there. And we looked at the average rates yesterday. Apple pays Chinese workers $2.88 an hour to make an iPhone. In America, minimum wage would have to be 15 to 20 bucks. There's no way they can make, or they can keep their margins, but the margins would be severely reduced if they were to do that.
And what's funny is people forget that you have all this additional costs on top of it. Healthcare costs for your workers, right? Time off costs. Then you have health insurance. You got payroll taxes, both local and federal, right? Then you have all these benefits. Bro, all that stuff adds to almost 40, 50, maybe even $60 a person. And that's at the low end, at the $20 range. Okay. Amazon pays at $20. If you're talking about more hard labor jobs, bro, that's going to be at least $40, $50. And that's if you get the personnel. We have one of the lowest unemployment rates in the country right now. I mean, in the time right now. So it's not even like you're at 8, 9% or 10% unemployment and you need all these jobs to come back to support your economy.
This is one of the arguments I think is pretty objective. And like, I get the argument as well of bringing manufacturing back to the United States. But I mean, I would ask the people in the chat, who wants to work at a factory doing some of this stuff? Now, some people are fine with that, but I would say it's a small percentage of people that actually want to make Nikes, because that's what, again, I was going to say Lutnick is talking about, right? He's talking about bringing all this domestic manufacturing back to the United States, irrespective of the cost of goods and then the margins that would create pressures on for companies. Who in America wants to do all that stuff? And if no one's willing to do it, where's the production? And then if you go with the robots, well, then where's the jobs? If the robots are doing it, there's not really the benefit of domestic manufacturing. So I think you have a point here. I think most people don't want to do this shit. And for some reason, Trump thinks everyone wants to start making phones.
Yeah. And the funny thing is, this is not like a new thing for this guy. This guy's been talking about it for the longest time. So us, like me and you, I'm not blaming you. I blame myself. We should have seen this coming a lot sooner. I think some of it was we were so enamored with some of the other ideas that he had around, being a little bit more conservative on the social side, seeing just how much crazy the Democratic Party had been, this unlimited allow everyone through the border policy. I think we saw some of those things where Trump's saying, no, this is wrong. And we agreed with those aspects. And we were like, yeah, you know what? Maybe Trump will be good for the economy and everything else because he's a businessman. But now he's in the driver's seat. And instead of pulling us into the golden age, quote unquote, he's pulling us right into a ditch,
What do you think about the argument right here that it's not about jobs, it's about national supply chain security?
Only to a certain degree. Like there's certain industries that are worth it to bring back. Like
chips.
Yeah, chips, shipbuilding, some of the steel and aluminum production. But dude, when you're going out there and you're tariffing Cambodia and saying you have a trade deficit with us, we want more things made in the country. Like, bro, I'm not trying to make t-shirts. Okay, I am not going to be on an assembly line making T-shirts, bro. And what's funny is he's doing it all across. Like, you got a tariff on Madagascar, you got a tariff on Ethiopia, you got a tariff on like the smallest countries and it's not logical, dude. It's not logical.
All right, that's Kris's take. Whether you agree with him or disagree with him politically,
I'm sure, bro. That's one of the great things about like a healthy society is that you're able to talk about this stuff.
Yeah.
And I'm sure that there's a ton of people on the chat. They're like, "Oh, Kris is stupid. He doesn't understand anything." And I probably, you know what? You have your right to criticize me all you want. If we ever get into a situation that we can't criticize each other, that is the day America ends. Why? Because it's the same criticism that's going to protect us against Trump's maniacal craziness that we have to respect. So when Trump goes crazy and the markets are going red, and that's like the world saying, "Look, we disagree." The good thing is we can get rid of this guy. With Xi Jinping, you can't. So I think one thing that we should all take a step back and be blessed at is we didn't have to live under Biden's stupidity when it came to the border, and we don't have to live with Trump's stupidity when it comes to the economy. Thank God for democracy, baby. Let freedom ring.
A free market society, irrespective of your words or your dollars, as the bond market is showing us right now, speaks volumes, regardless of if people agree with you or not. So
absolutely.
Thank you, Kris. Appreciate it. We will talk to you later. All right. Bond market still not really changing here, folks. 10-year basically at the high of the days. I mean, look, maybe there's a world where we get used to these types of rates in the bond market, and it is what it is, and stocks chill off. I think if stocks were S&P down 0.5%, I think if we were to see the market to come back down to the Sunday futures lows, which is about 4,800, and the bond yields were going up, then there would be even more pressure on the administration and Bessent to do something. But because stocks are staying relatively flat, remember the day they pivoted, stocks were down, like really down. When I mean pivot, I mean the 90-day pause. And I think that's also what compelled them. Trump obviously saw the market. He was like, wow, Dow Jones up 3,000 points in a day. That's a record, right? So they were seeing what was happening in the markets. Right now, stocks aren't really, Nvidia's green, right? So one reason that maybe we haven't had an announcement or they're not like legitimately freaking out yet is because yields can keep going higher, but if stocks keep going higher, that's okay. Now, it's not technically okay, for the goal of the administration was to get yields down. Bessent's been very explicit about this, but at least stocks aren't collapsing. When stocks collapse and yields go up, which again, we just haven't seen that today, then I think we get closer to some announcement. But obviously the question is going to be if enough of that pressure gets on Trump. He hasn't tweeted yet since the daylight saving stuff. Nothing from Trump yet. But the S&P 500 still here, down about 0.5%. Now, if they were to announce Vietnam, South Korea, Japan, a bunch of deals like back to back to back, I think that could also calm down markets. Maybe they don't get a deal with China anytime soon, but they announce a ton of these really good deals with other countries. And if they were to say, hey, we got a deal with Vietnam, and we know we said 10%, but we're going to give Vietnam 4% because of how good the deal is, that would really calm down the bond markets, because they would be like, all right, cool. So it might not be as inflationary. And that would be sort of a dog whistle around, hey, we're probably not going to keep this 10% to other countries. We're probably going to lower it aggressively. And they'll say that we negotiated such a good deal that we don't need 10%. But the bond market doesn't care. The bond market just wants to know, all right, 10% is not going to be the flat universal rate across everything. And I realistically think that's a possibility. Like, I really do think they can come out with deal after deal after deal and just be like, hey, we're lowering the tariff rate. We don't need high tariffs. We got some really good deals, yada, yada, yada. Is that going to happen? When is that going to happen? How is that going to happen? These are the uncertainties that are causing bonds or yields to be rising currently right now. Yeah, Vietnam is zero. The market would, yeah, dude, Vietnam, again, because of all this tariff stuff, I'm now learning how much manufacturing we do in Vietnam. And there's a lot of shit in Vietnam. Like, most of the Nike sneakers are in Vietnam, not China. So from that perspective, if we took Vietnam to zero, that would be pretty incredible to kind of see how the market would be thinking of safety, and at least the market being a little bit more relaxed about uncertainties not being as aggressive. Are you guys buying anything today? Are we buying anything? Are we buying Kimball Musk tweeting about why this tariff stuff is bad? Kimball Musk has been Elon's brother. He's been tweeting all week. Now he's tweeting right here that the trade war must end. The euro, the Canadian dollar, and the yen are growing in value. That's devaluing the dollar. Foreigners are selling U.S. treasuries. My conspiracy is that Elon's telling Kimball to say this stuff because Elon can't say it because that would be directly going against Trump. He can say Navarro's an idiot, but you're taking a jab at it. Boys will be boys, as Carolyn Levitt says, but that's not really going at Trump. If he were to say the tariff shit is stupid, that's going against Trump. Now, Kimball doesn't have that relationship with Trump, so I think Elon's probably co-signing it. And that's his way of saying, hey, this is like not something I really agree with right now. We got some people saying they're buying VOO, Hood, Tesla, Nvidia, nibbled at some grab under 4. I'm selling some puts. Sold all my Tesla and Nvidia for GME. Dude, imagine that's the play. GME, green, baby. It's like the weirdest assets. GME, Fartcoin, like these things are somehow green on days where you would think they aren't. And it's a lot of weird stuff in parts of the overall system. Okay, a lot of you I see are saying either nibbling or just holding put, which I think is fair. No one's saying they're selling everything, though. I mean, put in the chat if you're selling everything or you're selling a decent amount. I know some of you did go in cash at the beginning of the year, which has worked out, right? Cash is also a position and it's worked out. I really don't know a lot of people, even Kris, with how bearish he is about everything that Trump said. He's not selling, right? Steve's not selling. I'm not. Everyone close friends, personal people I talk to that I care about their opinion, they're deploying more capital. Derek hasn't told me that he's selling anything. It's like these are people that know the long game is America, but obviously the volatility within that long game is pretty aggressive. I'm down too much to sell. Yeah, that's another reason. It's like, well, it's scary to sell, bro. It's because then you miss a 10% reversal on the S&P. Again, people wait a year to maybe get 10%. 2 days ago, you got that in 2 hours. And I know we're down a lot, so technically the reversal should be aggressive, but still the fact that happened, the fact that an index, which is basically the country, could move that many trillions of dollars in an hour is insane. And so if you miss that and then we get back to those levels, then it's okay. But if we don't get back to those levels, which we haven't yet, to be fair, we've given back 50% of those gains, but we haven't got back to the absolute lows. It's very sad, right? Especially if you've waited years to compound and then you sell at the bottom of a 2-year decline in compounding. Like if you started investing in 2022, we basically are back at 2022 levels, at least on the S&P. If you sell 2 days ago at the bottom, theoretically, you're selling at the top of 2022 and you just missed out on 2 years of compounding, which sucks. Like it is heartbreaking for some people. But that is why I think, most people are still long and strong and believing that something will get done. Bitcoin right here, 82.08 right now. Let's hear from Adam Parker, get some of his thoughts on what's going on in this market and where he thinks about deploying capital.
Helps. Okay, so normally we can wrap our arms around it, but I don't have a large sample size of trade wars that I can analyze the subsequent distribution of outcomes. So look, I think the new thoughts for me this week over week are, one, it's worse now than it was a week ago. To me, the one trade battle that really matters is China, and it looks a little worse today than it did a week ago. It's mark to market. 2, while you might think 10% is better than 25 or 30, it's still bad. It still creates, I think, some price increases and slowing economy. I saw Jamie Dimon just said something that I wrote last week. I agree with that. I think companies are going to remove guides a little bit. So a short-term pair trade strategy might be short stocks that report early in the earnings season, along those that report late in the earnings season, because you get kind of
many of these quarters are completely. Who cares? I mean, right. I don't want to overstate it, but we haven't really talked about the bank quarters. It doesn't really matter. It's
all forward. Yeah, we need. I think the market's gotten a little too used to V-shaped recoveries, and we won't get one fundamentally this time. If you think about even last July, all of a sudden every equity guy I talked to was an expert on the Japanese carry trade. It reversed so fast that everyone didn't have to do anything. But go back to COVID, even the financial crisis, the V-shaped recovery came from things I don't think are as likely. Balance sheet expansion. We're kind of doging things. We're not expanding, right? A Fed massively accommodative, huge fiscal stimulus, helicopter money, like all that stuff aligned. We got monetary and fiscal stimulus combined, and market ripped. That feels less likely. So I think what you're left with is could a lower oil help? Could maybe the weaker dollar help? I think what Sarah said in the preview, like what fundamentally are we going to see that makes us more bullish? That may take longer. You see the price action. People want anything they can get, but I'm talking about when will companies guide.
Now, I agree with him, but there is a world that we have a V-shaped recovery aggressively, that Tom Lee face ripper, if the administration legitimately gets a deal with China and announces tons and tons of deals. And I think what really creates the V-shape is actually lowers that 10% flat tariff rate, maybe to 5%. Like there is a world in which markets are like, all right, cool. We're done with all this stuff. We can focus on earnings. Yes, the tariffs might be a little inflationary, but inflation's coming down. We can navigate it. We move forward. Like we will price all of that in and move forward. And maybe that situation does happen, which is why I think being long makes sense. But we don't know when it's going to happen, if it could happen, how quick it could happen. But is there a possibility? Yeah, I think there is a real shot that could play out.
Better. I decided this week that my 2026 earnings before are now my 2027 earnings. That seems like a reasonable case. We remove a year of growth. As I was out talking to investors this week, a lot of them thought that was too bullish. A lot of them thought you need to kind of think 25 earnings are going to be down a little bit. And so what I'm really starting brainstorming now is which companies really will deliver some decent fundamentals here, where I know there's going to be steady demand. Is it healthcare services? Is it, those kind of things where I can get better, estimate achievability, whatever that is for the average company.
What about what's happening in the bond market, as I described?
Yeah.
The selling at a time where equities are nervous, the selling of U.S. bonds, U.S. dollar, U.S. stocks simultaneously.
Yeah.
How can you make a call on equities without knowing what's happening there?
Look, as you know, there's always periods where these asset classes get super correlated. I would take a step back and say I disagree with the end of American exceptionalism logic because I focus on U.S. equities. If I describe to you the themes that I think are going to grow above GDP, whatever that is for the next 5 or 10 years, the U.S. equities over-index to them. It's AI, with the compute, it's AI software, it's power and utilities, it's even U.S. housing where we're low structures and building products, it's life sciences and that whole complex and healthcare services, it's electrification industrial. So which other countries' equities do you think give you better exposure to that than U.S.? Right, so right now there's a little bit of a trade war and Europe did well, but I think ultimately people come back to what the business is, where the business is the best, and they will be here. And so maybe that's a 6-month, issue because we have to get kind of pick through the python on that tariff stuff. So I'm not a long-term bear on the U.S. on a relative basis in any way because I don't want worse companies in my portfolio for a sustained period.
I just wonder.
Yeah, I agree. I mean, essentially what he said, you could deduce it down to stay long and this will be resolved eventually. We just don't know when. TLT right here falling down 1%. The 10 years at 4.5. The 30 years at 4.95. Dude, there is an argument. I haven't made up my mind about this, but there is an argument to buy TLT. And the basis for that argument is simple. Eventually, these yields will come down. And TLT goes inverse to yields. It should go up. You're getting a discount today, down for the month 5%, down for the week, down 8%. I mean, here's the question, right? Here's the question. Do we think the 30-year gets to some stupid, ridiculous number? Or the 10-year? Which I know these numbers are already feeling kind of stupid and ridiculous, which kind of maybe is a bottom on TLT because yields are topping out. Because if they do, TLT will be bad. But if they continue to just fall like normal, TLT should go up. So I think there's an argument here. I haven't bought TLT, but the more I think about it, if I'm bullish on Bessent doing something and Trump pivoting, and I think yields are egregiously high, and I could be wrong, maybe they have a lot more room to go, then theoretically the hedge is TLT. Again, you've got to kind of connect those dots to be able to feel that that's the right case. But if you do, there is an argument right there. Chris says, play the Dan Ives video. Chris, which one? Is it the one that he did last night? If you have the link, can you send it? I know he did a podcast this morning. Oh, this one from Bloomberg. Well, let's hear this one from Bloomberg. This one was yesterday as well. But you guys get my point, right? Like, am I crazy for thinking TLT could be an option? Like at 92, I didn't even look at it, but now at 85, it's like looking a little bit more interesting. But I don't know. I still am not fully sure on this. All right, here's the Dan Ives video from Kris from yesterday, or this from the podcast he did this morning.
5 years doing this, it's the scariest time that I've ever seen. And the reason that is like these tariffs, in my opinion, could take big tech, the U.S. tech industry back a decade. When you're playing a game of high stakes poker like this, you're playing with the economy. You're playing with ultimately CapEx, large purchases, and understand the rules of the game. So essentially what he single-handedly has done, I think as an administration, they've set off a snowball that's going downhill. And for someone like myself that speak to hundreds of people in terms of buyers and our team, buyers of spending, in terms of what CapEx looks like projects, I think 15 to 20% of projects, CapEx, automatically halted.
That's not good for Dan to say, because Dan's been so damn bullish on CapEx. If he's thinking that 15% of CapEx budgets go down, I don't know if that NVIDIA 180 price target sounds as reasonable.
Worry, and I've talked about it over the last week, is that you are fundamentally taking what I believe is probably one of the biggest assets in this country in terms of U.S. tech and basically taking it back many, many years, China ultimately giving them the leap.
I don't know if China gets the lead right there, but I mean, like, again, it can be bad for tech companies. Now, again, I'm of the belief that we will get a deal done. And so I don't think tech companies will be decimated in the United States. I think Dan also believes that, but he's trying to ring the alarm to Wall Street of like, hey, I'm giving you what I believe is going to happen to tech companies that, and you guys have listened to me for the past couple of years, you made a lot of money on tech. Now I'm telling you, if you guys, the Wall Street guys who actually have the power, don't influence the president or the administration to change their course, all those tech gains you got from listening to me tell you to buy NVIDIA and Palantir at historic lows, those are gone. I think that's the posturing that Dan is trying to imply with his analysis. I don't think he actually believes like these tech companies are going to fall to China. That's a bit more hyperbolic in my opinion. But I think he's trying to warn he's trying to warn investors that your gains could disappear if we don't do something about this tariff policy. Which again, I think he thinks and Tom Lee thinks we will eventually do something about this tariff policy. But the question is when. The question is when. And yeah, so Brian says, so CapEx end when borrowing rates drop. That's another thing you could disagree with Dan on. Like at the end of the day, if this AI revolution is real and Google just reiterated that they're going to spend $75 billion, Meta's not going to, take down their forecast by 15%. Now in 2026, if Google's like, hey, we were going to spend 80, we're going to spend 60, then Meta might not feel like they have to keep spending up with, like if all of them take it down, it works. If one of them says, screw you, we're going to keep spending, we're going to win the AI race, I think the rest of them have to spend. But I think in that moment, all of them would realize, hey, like, let's just all not spend as much because then the market's going to not punish or reward any one of us, but at least we'll be able to navigate saving some money on CapEx to be able to preserve our margins if the tariffs create margin pressure. Having said that, if AI is real, you would expect all those companies to still put pedal to the metal. But don't know if that's exactly going to be the way it plays out. If we get a recession and increase prices for data center equipment at the same time, then they will reduce CapEx. Yeah, that's a good point. If we get a recession in the United States, which hurts their margins, hurts their demand, and we get tariffs on maybe not semis, but things that are involved in creating data centers, which is a lot of other stuff besides semis. Yeah, that could obviously get them to feel some pressure to reduce their CapEx. And shareholders are going to say it as well. Shareholders are going to be like, hey, I mean, the way this would play out is shareholders would be like, hey, where's this ROI from this whole AI thing you've been talking about? Oh, it's not here. It's been 3 years since ChatGPT. Cool. Buy back your stock and stop buying GPUs. And I think that's a legitimate concern from shareholders because I think Meta and Google have kind of showed somewhat of an ROI in advertising. I think Microsoft has shown an ROI in cloud, but not really anything else. Amazon is actually showing some decent ROI in purchase conversions, also with advertising in terms of the Amazon website. Obviously, AWS, AI workloads. Apple has shown no ROI. Apple is not doing a damn thing with AI, in my opinion. And then Tesla, obviously FSD, but that's got to work. So if there's not something more substantial in terms of the return on investment from all this CapEx, which I think there will be. We just don't know exactly what that looks like yet. Yeah, I think shareholders are going to be like, all right, we're in a recession, tariffs, trade war, no more AI spend, buy back stock. And that obviously could be not the best for the AI narrative. But again, all of this depends on us not having a deal and actually having insane tariffs. I really do think we will get a deal. We will not have insane tariffs. We will get yields to come down and things are going to be okay. In the midst of all of this, like logically, I don't think Trump wants a Great Depression. I don't think he wants to lose the midterms. I think they're going to figure it out. But I don't know how. 30-year right now, 4.944. Again, not really letting up. And then the 10-year, 4.543. Currently right now. Apple spent all their money building a giant donut. Dude, they built this Vision Pro that I've been consistent on this for like 2 years, dude. The day it came out, I was like, no one's using this shit. And I had a ton of debates with people publicly about no one's using this shit. And I feel like I've been vindicated. I've always been against the idea that we're going to replace our phones for a headset. Like always, like going back to 2021, I was like when I heard of the idea that people would wear glasses, I'm like, nah, dude, I don't see it. I don't see the vision. Now, maybe Meta has a chance to bring that world in because they've been doing a lot of innovation with Orion and all these different components of their glasses, but that's still 4 to 5 years away in any meaningful form factor where people say, I don't need to look at my iPhone. I can just put on some glasses and get stuff done. But yeah, the donut is the campus in Cupertino. That's correct. But that's where I think Apple dropped the ball on. Like, I wonder how much money was wasted on the Vision Pro, bro. Like, how much money was wasted? R&D, employees, all whatever they spent on the AI parts of it. Like, no one's buying it. Do they even sell it, dude? Do they even do the demos anymore at the stores? Like, it's just. And then they missed the foundation model stuff. They missed, like, if Siri could be agentic right now, or at least close to it, because they had caught the GPT revolution back in 2022, I mean, you would have a real upgrade cycle on your hands, because with new architecture, you could actually say, hey, buy the iPhone 18 because Siri will do everything. We're not even close to that, bro. And I think that's also the issue in the context of Apple. Yeah, Apple Car. I mean, I don't want to dog on Apple. I'm just saying, like, this is the problem with the company. And then you put on China tariffs. Like, that's not making anything that much easier. Let's take a look at some data that I haven't looked at in, I think, 2 weeks. I haven't looked at this data in 2 weeks, which is Bitcoin ETF inflows. I've been so obsessed with tariffs, I forgot to even look at that piece of data. I did not roll back my covered calls. I am leaving them open. Where's NVIDIA? NVIDIA's at 108. Covered calls are at 110. I'm going to let them play out. They're trading at 64 cents right now. I got 43 cents for them, so I'm still down $200. I think as long as this market stays here, I should be okay on those. I also have Robinhood 42s. Dude, I got 11 cents for them. That's how bad. They're still worth 17 cents. At one point, they were worth like $3 because of the move that we saw a couple days ago. But yeah, I think Robinhood 42, NVIDIA 110 will be okay. So hopefully you don't have to roll those. All right, Bitcoin ETF inflows. Take a look at this. Negative. This is what I thought would happen. Negative for the past 2 weeks. So the right-hand side of the screen, this is the total cumulative negative number. Last time we had a green day was April 2nd, ironically, right? 218 million. Every day after that, negative triple digits. And a couple days before April 2nd, negative triple digits again. But still, Bitcoin's not like destroyed. Like, it's not like I know it's not in the 90s anymore, but it's not like it's like 65 or anything great. Like, it's still holding up relatively well, in my opinion, compared to the NASDAQ or the S&P, even in the midst of the ETFs not really pumping it up. Yeah, Bitcoin holding up very well regardless of the flows. I agree. Which is also good for Hood, to be honest. Amit, I think there's an option. There's a chance with TLT. Yeah, dude, the more I think about it, and it's just a thought that's coming to me because I think yields are topping, right? So that's where TLT, that's the name of the game. Like, I don't think that's crazy. I don't think I would buy stock. I think I would go long with calls if I do it. There's more of a delta there, and you can get out of them whenever we make the move. I know. I was reading some analysis on TLT a week ago, and there was this one guy who said it'll be like 150 by the end of 2025. Or sorry, 120, which is January $2,600 call. Yeah, that's not, it's like decently out of the money, but it's enough for it to pump. I think the 5-year high back in COVID time when rates were zero, yeah, it was 167. So that 150ish range, maybe it was 150 that the guy had the price target on. If he's calling for that, but that seems too aggressive because rates would have to come down like a lot. And we have that Fed Williams guy, president of New York Fed, who just said, like, I think inflation is going to be at 4% by the end of the year. But 100 from 85, we don't have to go back to 150. If rates come down 100 basis points, 200 or 150 basis points, I mean, I don't think that's crazy to imagine. Though we were at 92 the other day, literally the other day, right? I mean, what about SOXL and TSM? Those are semis plays, right? Semis right now, I mean, you have to believe in the long-term vision of semis if you get into those. Right now, it's volatile. The only semi I'm buying is NVIDIA because they have enough growth to justify the, in my opinion, ridiculous valuation that they're trading at right now. And it's NVIDIA, right? Like they are the backbone of all this stuff. And so TSM and SOXL are not horrible, but you've got to really understand those companies and their supply chains given this tariff stuff. But all semis, including NVIDIA, are probably, I don't know, at least in the short term, they're not necessarily doing the best. Or they're probably not perceived to be able to do the best. Granted, again, a pivot could get NVIDIA back to 120, I think, easily. I mean, we were almost there the other day. But we've got to eventually get that pivot. Tom Lee is forecasting Bitcoin at 62,000 by beginning of April. Well, that was in December, right? Yeah, so we're in April here. We're not at 62,000, which is, that's why I think Bitcoin is holding up nicely. So yeah, like if we do get rates down 150 to 200 basis points, which I know seems like a lot right now, but given that PPI report, it feels like it's not that much. Then why wouldn't we see yields come down? And why wouldn't we see TLT go up? Well, the reason would be because tariffs are inflationary, but if Trump pivots on the tariffs, then those are all the pieces of the puzzle. Trump pivots on the tariffs, CPI, PPI keep coming down, yields come down, which is all you need happening at the same time. Markets get more certainty. They buy bonds. TLT goes up. Like that you put those 5 parts of the equation together, you should get a higher TLT. But we've got to see if that actually is the way it plays out. Yeah, but bond yields would go down if Trump pivots and if we continue to see inflation to the downside. And obviously, I forgot to mention, if the Fed cuts, I mean, there's your biggest catalyst. And hopefully the Fed's not cutting because something's breaking. They're cutting because naturally they should be cutting because, again, CPI, PPI coming down. So the restrictive neutral rate is still too tight. All of that, you put that together, that's a recipe for TLT to go higher. But again, if you use it as a hedge, you've just got to be certain that a lot of that stuff actually plays out. Do you think a Trump China tweet is very likely by the end of the day? No, not unless the stock market really sees pain. Like right now, S&P's flat. I think you need some moment, or you either need yields to literally explode, or S&P's green right now. You need yields to really explode, I think, to get that tweet, or you need markets to go down like at least 4 or 5%. Outside of that, they're gonna hold their cards as long as they can until there's any real pain. Aren't yields already exploding? Yeah, but stocks are not going down, which is good. Yields can go up if stocks go up too. If they go up and stocks go down, that's where we have an issue. So to an extent, right? Like obviously if yields go up like 7% or something crazy, that's not happening. But like then even if stocks go up, I think there's an issue there. But right now it's relatively tame. Again, yields are up a lot over the past couple of days. And then 30-year, the highest since 1982 in terms of weekly gains. That's not good. But the market's not literally in the gutter. And I think that would kind of force their hand if they see that. I mean, that literally forced their hand 2 days ago. It forced their hand. He said, all right, 90-day pause. And then he bragged about the Dow Jones going up 3,000 points. Like the market forced their hand when they saw how bad it got as yields were going higher. And that's the issue. Why is Apple at 194? I think the market thinks there will be a deal. If you don't think there's a deal, you get the hell out of Apple. If you think there's a deal coming, you front run it and you buy Apple. And so if the market thinks some type of deal is coming up soon, then I guess they think we will move past this. Yes, yields go up when people sell bonds. Correct. They're inversely related to stocks. So stocks go down when you sell them. Yields go up when you sell bonds. Amit, is it okay to hold SOXL for next 1 month, usually 3x ETF to sell in a couple days? If you buy levered ETFs, first of all, it's a highly volatile in this market. So you've got to know that going into it. Like if you bought ROBN, which is the 2x Robinhood, you've lost your shit because especially if you bought it when Robinhood was 50, 60 bucks, right? Or TSLL, if you bought that at 290, now Tesla's at 240. But if you're trading them, sure, right? You just have to be correct on the direction of your trade. But I've always been against holding them long-term. Like I don't get why people do that. I understand selling options on them. I understand maybe using them as a quick weekly way to sell covered calls or something. But people are like, oh, I want more exposure when SoFi doubles. So I'm not going to buy SoFi. I'm going to buy SOFX. And I'm like, okay, but you don't know when SoFi is doubling. And if SoFi stays flat, the net asset erosion of the underlying value is higher. This is the best example, right? So BITX, this is what's on the screen right now. It's up 7% on the day. Let's take a look at their yearly chart, okay? BITX was exactly this price in October of 2024, $34. Bitcoin in October of 2024 was 65,000. Bitcoin is now 82,000, aggressively above that $65,000 level. BITX is exactly the same price, $34. So BITX, the leveraged Bitcoin 2x fund, and now it did get to 71 at one point when Bitcoin got to 100,000. But now that Bitcoin has relatively remained flat, even though it's still higher from that 65,000 level when BITX was trading at this level, you didn't get any value from this trade. At worst, you lost value in the trade because the flatness of the underlying asset eroded the leverage of the ETF itself. So yeah, that's the only reason I would potentially stay away from leverage ETFs right now. I feel physically sick from all of this. I mean, look, I'll continue to reiterate this. Everyone should be protecting their mental in times like this. Maybe you got to not look at the portfolio. Maybe you got to go on a walk. Maybe you got to go on a swing set. Maybe you got to go get a manicure that you can't afford. Whatever you got to do is whatever you got to do. I know there's a lot of headlines. It can get scary. Sometimes, shut it off and just try to protect your own sanity. Try to get off leverage if you're super leveraged. I mean, this is one of those situations that will be resolved, and I think it could be resolved by next week. But it probably won't be resolved by next week. And if it's not, then it's a market we just have to live through. But it's not a market where you have to, just like make you sick, or like really cause a lot of mental stress, especially if you have other things in your life that are more important, like a family and all that stuff, right? So this too will reside. The question is just when it'll play out. Yeah, Trump hasn't tweeted yet either. Nothing here. We need a Diet Coke chart. That's hilarious. I mean, when will we have the quiz event? We will have it eventually. The volatility over the past couple of weeks has not really allowed me to think of that. But yeah, eventually I'm still planning the Toronto meetup. By the way, if you're interested in that Saturday, just make sure you're following on Twitter. Tomorrow, most likely, I will put out the link, the Google form to sign up for that. Dates are 24th to the 27th. That's what it looks like. So we're going to get that meetup done, and then we'll focus on hosting that quiz event, hopefully in May. But yeah, the Canada meetup should be still good to go. All right, do we end it off, guys? This didn't even feel like a 3-hour stream, bro. Based on yesterday, like this really feels like it was a 30-minute stream. It's like, I don't know, I guess that's the evolution of streaming. It's like you end up doing it so long, like 3 hours feels like nothing. Wow, S&P. See, I'm about to end it, and then we go 0.3% up. We go a little greeny green. Apple goes green. Shopify, AMD, GameStop. Palantir's almost green. NVIDIA is going to make me roll these damn covered calls. But yeah, that did not feel like 3 hours, bro. That really didn't. It's weird how fast it goes and how it's not obviously fast 3 hours, but it feels like it's fast just as you're navigating the markets. Qs are up. Dow Jones. Are we up on the Dow Jones? We are up on the Dow Jones. Barely by 20 points, but it's up. And then the NASDAQ is up by 50 points. And SPX right here up by 8 points. So very relatively small green candles, but still a little bit of green. A little bit of green. I'm ending the stream. Market, hold on. Just doesn't let me, dude. Amit, what is the best pre-IPO platform? Okay, this actually brings up a good topic I can tell you guys about. First of all, Hive, I think, is my favorite. HIIVE. So those are companies where you can buy secondary shares of like Figure, Aptronic, and Anduril, all that stuff. Now, when you sign up for those things, you have to prove you're accredited, but also you're going to pay a premium. Like, you're not going to get a juicy price. You're going to probably be paying tens of billions of dollars higher than the price that SoftBank gets to buy these shares at. But if you really want to get in it, right, there is the opportunity that is out there for investors to get into it. Having said that, the reason I'm saying this is because I just got the paperwork this morning. I'm investing in a startup. I'm investing in a new startup. I'm actually becoming an advisor to that startup. And so I am taking $5,000 out from my cash reserves. I'm putting it into a new startup. And as an advisor, I'm getting $20,000 in advisor granted shares. So it would be a $25,000 stake, which is cool because it's like the 5,000 turns into 25 to be an advisor. And the cool thing about the advisor shares is that they're not vested. So as soon as I get them, I could theoretically sell them. Now, I actually believe in the company, and I want the 25,000 to turn into like $1 million one day. Or if I lose it, I lose it, right? Who cares? Like that's the goal with startups. But I am doing that. So it is interesting to me because to me, it's a form of diversification. Because yeah, I'm still deploying money in the market. I deployed money in the market yesterday, but it's also nice to just have something that has nothing to do with tariffs. It's this ambitious kid who is trying to build a unicorn and wants some advice and is actually willing to give me some shares to give him advice and participate in that round. The cool thing about this kid and why I think the startup actually could work. So he's 31. It's not like he's 18 or something. He's at 2 exits already. Those exits didn't make him rich, but he's raised venture capital before at the highest of levels. Like, we're talking about tens of millions of dollars. He's exited, which means he got someone to buy his companies. He didn't make a lot of money off those exits because those businesses weren't super successful, but he did get those exits. And this new round, I can't say what the name of the company is. I think they're going to do a public launch in July, but it's really interesting. It's a $100 million valuation, so it's basically like a penny stock. It's his third startup, and the kid really wants to be like the guy who took something and turned it into like $1 billion company. Like, I could tell the ambition is like there. And he tried 2 times, and he didn't really fail. He failed to get to the like unicorn level, but he got exits. And when you're trying to just like get someone to like even buy your vision at break even, the fact that he was able to get an exit to me is incredibly impressive. And now he's trying the 3rd time. How did I meet him? I met him at the Gold event at Robinhood. So he actually knows Vlad from back in the day. Him and Vlad were part of the Index Ventures, which is a VC firm class of like 2012 or something. Obviously, Vlad ended up turning that investment into Robinhood, which is like a $40 billion company, which is incredible. But that kid knew Vlad from back in the day. So he was at the Gold event. He's a fan of the streams. He might be in here right now. He might be watching. And yeah, he came up to me and he said, yeah, I watch the streams every day. I have my own company. And then I was like, all right, tell me what the company is. And he started talking about it. And I was like, wait a second. You're not going to keep talking about this unless you let me invest. So thankfully, he said, all right, I'm going to let you invest. And hopefully that one ends up working out. Again, they're gonna do their public stuff in July. I will say it's in the creator space. It's in the creator space. And I'm a creator. So that's kind of the synergy right there. So no, I said he's not a kid. I said he's 31, therefore he's not a kid. He's not like 18 years old. That's what I said. If I said it the opposite, then I meant it to say he's not a kid anymore. He's 31 and he's had two exits already. But it's in the creator space. It's a really interesting idea. I've seen a lot of creator startups, and I think they're all full of shit. Like, I really don't like a lot of the platforms that are optimized for creators, because I think they're either trying to compete with like YouTube and Twitter, and like you're not going to beat those guys, or they're trying to build these like ancillary services that I think are just stupid and creators are not going to use. So when I saw his idea, and he's already raised 15 million, $100 million valuation, the set of investors he got, the entire team is from MIT. I was like, okay, this is a different version of trying to tackle a problem that is really complex in the creator economy. And yeah, that's why I invested. So have you checked out Stan? Yeah, I've seen Stan. Stan is doing very well. Stan, I think they're a creator company that lets creators like sell digital products and stuff. I don't really love the idea, but the company's growing. I think they're doing like 30 million a year, right? So they are growing pretty rapidly. Even if this one's this one's a variation of Stand, but it's much more intimate about the creator and their community, and so that's why I think it's really cool. Dude, he just needs your 5K. Trust me, he does not need my 5,000. This is a kid who's gone through Y Combinator twice. He has every Silicon Valley connection in the industry. Like, when you're at this level, you don't need $5,000. He wanted the connection, and I wanted the investment. I wanted to say, all right, let me see if this can turn into a lot more. But it's really cool. It's really, really cool, and hopefully that can turn out into something. Why do you keep saying I'm calling him a kid? I did not call him a kid. I'm saying he's not a kid because he's not 18. I said he's 31. If I did say he's a kid, I don't mean to say that, but like he's been through the startup world. He's done some shit. But it's really cool, right? Like that's one of the reasons why going to these events are super cool, because it's like you can meet these people and they're super ambitious, and this is why networking is important. And then like you have an opportunity, but I mean, like, what if this kid's built? Okay, now I see what I'm saying. I caught myself there. What if this kid built? I don't know why I'm saying it like that. Maybe it's because he looks young or something. What if this adult builds $1 billion company and you met him at some event and he told you about it and then you passed on it? You know, it's like, because if you lose 5,000, it's like, oh, there's whatever. But the 5,000 turns into like 500,000, and that's a good investment. Yeah, I did say kid. Okay, I caught him. I said kid. I meant to say this guy. Whatever. But anyway, yeah. So that's another investment I've made. So this will be my fourth investment. First one was Figure in the private market. Second one was Eptronic. Third one was Derek's startup, which I think that startup's like, you can call me crazy. I think he's going to build a $100 billion company. Like, I really do think that's going to be an incredible company one day. And then this is the fourth one. If anyone has any ideas, by the way, and you're building a startup or something, I mean, DM me on Twitter. I would love to see some decks or some other ideas that are out there. This is why the show is good. Amit is knowledgeable and low-key a comedian. Okay. Can I ask you guys a question? Okay. And don't respond if you were in the market close yesterday. Okay. Can you just do me a favor? Don't respond if you were in the market close yesterday. For those that were not in the market close, what do you call a male chicken? Okay. What is a male chicken? If you were in the market close, don't respond to this. If you're hearing this question for the first time, what do you call a male chicken? Because for some reason, I get destroyed yesterday for not knowing what it's called. Damn it, too many of you are getting the answer. Okay, it's a rooster. It's a rooster. I didn't know it was a rooster. Because I was trying to make that analogy of like when the chickens come home to roost or whatever. I said when the roosters come home to crow, and I was like, what did I just say? What is that? Like, what is this analogy? Okay, it's a rooster. All right, so here's the next one. What do you call a male deer? What do you call a male deer? Even Steve knew this yesterday, dude. I was so pissed off. I was like, damn it. Even Steve knows this. Wow, everybody getting it. Yeah, it's a buck, dude. I didn't know that either. I didn't know it was a buck, and I didn't know it was a rooster. I didn't know these things. Been too busy learning about the bond markets. S&P up 0.43%. 10-year is coming down a little bit, 4.525. But I've been too busy learning about that stuff to know a male chicken is a rooster. But anyway, for those that are part of the stream and get some value from my inability to know these basic facts about life, I appreciate you all being here. Trump just tweeted, did he? Nope, no, he didn't. Last tweet was the daylight savings tweet. No tweet yet. Did you stay up till 3 looking at bond yields? No. I slept early yesterday. I slept at I slept at 12, which is not really early, but for like 12:30. I had a good sleep, dude. I woke up at 5:30 today, got a bunch of work done, took a shower. It was a good regular sleep. Oh, what I did watch last night, I didn't watch any movies. If you were on the market close, there was a bunch of people telling me to watch movies, especially Steve. Is Vlad investing in his startup? No. Vlad's not on the cap table from what I saw. But he does have some pretty, again, I don't want to say the names yet, but when they do it publicly, I'll say it. He does have some pretty elite angels on the cap table. And I was like, how the heck did you get these guys to invest in this? And he was like, oh, that's my buddy. I knew him from 5 years ago. I was like, what? Like this guy is like really, he's really connected in the valley. He just hasn't had that big exit. And that's why I think he has a chance to pull this one off. But you know what I watched yesterday? I got through like an hour of it. I watched the Dave Smith, Douglas Murray debate on the Joe Rogan podcast. I'm telling you, it's quite interesting. I was tuned in, listening, attentive to that debate. It's like a 3-hour thing. I think I got through like an hour of it. But I can't sit and watch Days of Thunder or whatever the movie's called. Like, it is really weird, bro. Like, I'm literally staring at these guys talking, like actually trying to understand what's going on, not distracted at all, not looking at my phone, which is what you're supposed to do during a podcast, right? You're supposed to just listen and like do something else. I'm like actually watching it like it's a feature film, but I can't sit through a movie. It is really weird, bro. It's like when there's some intellectual, philosophical discussion, debate. Obviously, I'm a debater. I love analyzing debates. I'll sit through it. No problem. Then you make me watch Goodfellas or something, and I'm like, why am I, like, what's the point of this? Like, what are we watching here? It's weird, dude. It's weird, but yeah, that's what I watched to go to sleep last night. The first 40 minutes did suck. I agree. The first 40 minutes was like debating about semantics and stuff, but then finally they got to some actual relevant stuff. Yeah, the first 40 minutes was just like, because as a debater, you can analyze like how they're trying to like make the argument and stuff and like what route they're going. And like, I don't know, that stuff like is really interesting to me, but it just went on for 40 minutes. And it's like, all right, guys, like this is like, we get it. You don't agree on this, move on. But it kept me interested, even if it wasn't a good debate for the first 40 minutes. Pound right here down 2%, Qs down about 0.4, S&P still up. So yields coming down, stocks going up. That is good. Although yields aren't really coming down. We're back to 4.53. We were just at 4.525. But at least stocks are going up if yields are going up as well. The first 40 are not necessary. Like, dude, yeah, the first 40 are absolutely not necessary. So you probably don't need that. Amit is a really weird Gen Z kid. I am the last year of Gen Z. So I consider myself a millennial more than Gen Z, dude. And I'm definitely not Gen Alpha. So yeah, I think like, I really don't, I've never considered myself Gen Z because it's like literally the last year before we had Gen Z. All right, weren't we supposed to end the show? like I think 30 minutes ago, I was like, all right, guys, are we ending it? And then we got into a different topic. All right, I think we do end it. It's 12 p.m., 3 hours. I was born in 97, not 98, October 97. So the very, very end of this Gen Z thing. Amit, what do they call a baby horse? I don't know. What do they call a baby horse, chat? What do they call a baby horse? What do they call a baby horse? What do you call... I feel like I should know this. Wait, is it a pony? Oh, shit. No, you guys are going to roast me for that. It's a foal. What the hell is a foal? All right. You can't... Why did you guys know this? Why are there so many comments of like... You guys are really making me feel like I just don't know things about like the planet. Like, what? Dude, at least I didn't say unicorn. At least, like, how do people know these things? Like, where, like, when did you find out about this term for a horse, a baby horse? Like, I don't get it, dude. I don't, like, you guys find a way to know this shit before everyone else. A foal, huh? Pony wasn't a horrible guess, though. Unicorn would have been disgusting. Pony is like... It's also a horrible guess, but still. All right. I think we ended out right there. Thank you, everybody, for being here. Word of the day. Again, market's relatively flat. We'll have Steve on the market close, and we'll see how things play out. Word of the day, I don't think I'm going to say this wrong, is Harry.
Harry.
Annoy or trouble repeatedly. The celebrity avoided the reporters who tended to harry her with endless questions. Guilt harries his thoughts and refuses to let him rest. to annoy or trouble repeatedly. All right, well, obviously, the tariff volatility has harried the entire market, especially the bond market, but hopefully Trump is able to reverse that in the coming weeks. All right, cool. That's it for me. Thank you, everybody, for being here. Appreciate you all. It is Friday. Hopefully you get to enjoy the day, even if markets are doing whatever they're doing. I'll be back for the market close. I don't know if we're having Palantir Weekly tonight. I think we are. I'll confirm that on the market close. But if I don't see you for the rest of the weekend, yeah, thank you all for being here. Sunday futures will be live again, 7:45 on Sunday. And we'll have the market close later today. All right. Thank you, everybody. Appreciate you all. 3:45 Eastern. We'll be back for the market close. Bye, everyone. Have a good one.